All right, House Insurance Rate Study Committee members, please take a seat up here, and any other House members who are here, you're welcome to join us. I saw Chairman Robert Dickey, and anybody who's here from the House, come on up here. Definitely want to welcome everybody here to Macon, Georgia, to the third House Insurance Rate Study Committee meeting. We're looking for ways to make insurance more affordable for hardworking Georgians here in Middle Georgia and otherwise. Appreciate Speaker John Burns for putting a priority on this affordability and cost of living issue and putting nearly 1/10 of the House on this study committee. This is our third meeting. We met at the state capitol back in August. We met in Savannah in September. I'd like to thank Georgia Southern for hosting that Savannah meeting at their Savannah campus, the Armstrong campus. Thank Sarah Powell and the president of Georgia Southern for hosting us there, and everybody who participated in that meeting. We're going to have a meeting in Columbus. I'd like to thank Democratic leader Carolyn Hughley for organizing that meeting in Columbus, and thank you, Leader Hughley, and thank Columbus State, thank AFLAC, and everybody who had made preparations for a good meeting in Columbus. Tragically, that meeting was canceled due to the death of Chair Lady Mandy Ballinger, whose funeral was scheduled for that day. And so we will have some speakers here from that meeting in Columbus. I'd like to thank Georgia Farm Bureau for hosting this meeting today. After all the growth in Georgia in terms of population and economic growth, our number one industry and our culture is still agriculture here in Georgia. So having this here at Georgia Farm Bureau, I think, is important for a lot of folks in Georgia. I want to thank Representative Jacqueline Ford from Tifton for suggesting that we look at ag issues and having a meeting accessible to Middle and South Georgia. And so thank Farm Bureau for having that. We're going to hear from President Tom McCall, who is no stranger to the Georgia House, in just a few minutes on behalf of Farm Bureau. Today's issues are agriculture, the premium tax, and auto insurance issues, in addition to the general scope of the committee, which is looking for ways on insurance rates, on claims processing, on profits, to make sure that insurance is affordable as it could be. This is a national problem here in Georgia. We've been looking for solutions to this affordability issue. This is the third quarter of four meetings, so we're on the back half of the study committee. So any good ideas that have not yet been presented, please help us get data. Please help us get knowledgeable speakers to the next meeting, which will be in Gwinnett County on December the 18th at 2 o'clock at the Gwinnett Chamber. We look forward to having another informative meeting. As the Speaker of the House, John Burns, says, let the data drive the policy. So the better the quality of presenters and information we get, the better the outcome will be. The Insurance Commissioner, John King, is going to give us some good news this morning, in addition to the news he's already gotten out this week. Look forward to hearing from him. We got Steve Manders coming back. Steve gave a good presentation at our first meeting and is back here today. And then we have Bryce Rawson also from the insurance department here today, and additional folks from the insurance department. There are several House members who are joining us by Zoom, who you'll get to hear, I believe, through questions later. So I want to thank them for joining virtually today, and I want to thank local reps. So with that, let me call on President Georgia Farm Bureau, Mr. Tom McCall, former Representative Tom McCall, to lead us off today. And let's thank him and Georgia Farm Bureau for hosting this meeting.
Well, thank you, Mr. Chairman. And on behalf of our staff in the home office and our employees statewide, welcome to the home building of Georgia Farm Bureau Federation and Georgia Farm Bureau Mutual Insurance Company. And I want to tell you just a little bit about what we are, because it's complicated. We are a member organization. And if any of y'all are not members, especially on the committee, I put a card, and all you got to do is take your phone and do the little squiggly thing, and y'all can become members while you're sitting in this meeting. And we would appreciate it. And by virtue of that, that means you are my boss if you are a member and you own part of this building. But, you know, if you like to eat 3 times a day or more and wear clothes and live in a house made out of 2x4s, you ought to be a member of Georgia Farm Bureau, because that is what we protect. You know, our purpose in 1937 was to represent farmers in the legislative arena. And we've been doing that since then. And as long as I'm here, we're going to continue to do that. And I think we are the best at it. We have 230,000 or so member families statewide. If you count in votes like some of y'all may do, that's probably 500,000 votes that we might have a little influence with over the whole state of Georgia. You don't have to be a farmer. You don't have to have insurance with us to be a member, but we would appreciate it. We are the largest ag organization in the state, but now there's two parts. There's a federation and there's an insurance company. They are joined at the hip. They work together. Our federation has a public policy department who a lot of y'all know. That's at the Capitol every day when y'all are in session and a lot when you are not. We have an information public relations. We do 2 magazines quarterly. We have our own TV station upstairs that we do a weekly TV show. And we have a large social media presence. We have a field service department that looks after 158 county offices across the state. We have brick and mortar in 158 counties in this state. So we are a service organization to people in Georgia. The Mutual Insurance Company is the largest domiciled insurance company in the state of Georgia. Y'all know there's over 200 companies doing business in the state. We are in the top 10 of those, and we are number 1 with farm insurance. That's why the insurance company was started in 1959, was to help farmers find insurance. And they support the mission of the Federation through ag. A lot of the money goes back to local offices, to local counties, and it is spent locally on ag issues and for our members. Now, y'all know we had Helene last year. It hit us, this company, for around $430 million, somewhere in that neighborhood. We had over 17,500 claims filed. All of them, but about a dozen are settled. And we have paid the policy limits on that dozen, but some public adjuster showed up and decided we didn't do right, which one good thing could come out of this study committee, and I probably ought not say it, is bans public adjusters in the state of Georgia. But anyway, we are doing what we are supposed to be doing. And I want to tell you a story about the culture of the way Farm Bureau insurance works. We had a little hiccup with a Helene claim down in southeast Georgia. And something happened here that will not happen any other company. The president, the chief administrative officer, the general manager, the chief operations officer, the head of claims, the state sales manager, the district sales manager, and the district federation manager all got in a truck and went down and met with the people where the hiccup was. And we got it settled. I don't think you will see that in any other company other than Farm Bureau, and that's the way our culture works. Thank you for what you did last year with tort reform. It's happened. We were in the process for the last couple of years of doing some adjustments to our rates before tort reform came up. And you're going to see some of the effects of that over the next year or two. I served on a bunch of these study committees. Most of them were transportation, natural resources, agriculture, that type stuff. And we here at Georgia Farm Bureau look forward to what's coming out of this one, the suggestions y'all have. You know, folks ask me all the time if I miss it. I said I miss my buddies, and I get to see y'all by doing this job. I don't miss exactly what y'all all are having to go through. But thank you again for coming today. We appreciate what you do. The office on 5th floor that they let me sit in, the door is always open anytime of y'all are this away. If you're going to Bass Pro, turn in the first driveway and stop and see us. Now, some of y'all old folks may remember the ag office always had popcorn. Still does, I guess, doesn't it, Robert? I got you some hot, fresh popcorn back there. Y'all help yourself. I just wanted to bring you memories back to how it used to be when I was up there. One more important thing, the bathrooms are out the doors to the left, right behind the elevator. So thank y'all very much for coming. Thank you for what you do. Thank y'all for still remembering my name and being my friend. Y'all take care.
Thank you, President Tom McCall. All right, I will now turn the microphone over to our Georgia Insurance Commissioner, John King.
Thank you very much, Mr. Chairman. Leader Hughley, it's great seeing you again, man. Chairman Nussman, thank you so much. Members of this great committee, I really appreciate the opportunity to briefly talk to you of some of the highlights that we continue to work for in our office. But before I turn it over to Steve Manders, who's the brain of the operation, he has forgotten more about insurance than many of us will ever get to learn. Thank you so much again for the opportunity to brief you all on the progress that we're continuing to make as we strengthen Georgia's insurance marketplace to deliver a swift and necessary savings to Georgia families. Just drag in here anytime you want to there, brother. How you doing, bro? Hey, he was taking care of one of his constituents, I'm sure. Selling insurance. There you go. Well, thank you all so much. Over the last year, we've secured, want to highlight the recent announcement from State Farm. Over the last year, we've secured more than 10% in total auto rate reductions from State Farm and have projected to achieve over $400 million in savings for Georgia's drivers, giving the average policyholder over $190 in savings per insured vehicle. This reflects a sustained consumer-focused regulatory and work this is not a one-off. Other companies, including this company, will be making announcements soon. And I'm very proud of the leadership of Georgia Farm Bureau of being able to join in this effort. And I need to allow them the opportunity to showcase what they're doing. But they've been at the table working with our agency, working with all parties to reduce the burden that Georgia families are suffering as a result of rates. Significant reductions across the market demonstrate that our reforms are working statewide. Not just one carrier. We have a wide variety of success in companies like Georgia Farm Bureau, Liberty Mutual, Southern General, Progressive, and its subsidiaries, and many more. These filings show clear signs of improving competition and market stability. Reforms, filing use was one of the things that we worked on very hard in 2022. We worked together to close loopholes that allowed insurers to bypass oversight. With large automatic increases, we brought transparency and fairness rates back to Georgia. Probably one of the most significant efforts is the Civil Justice Reform Act that you all passed last year and the governor signed. Those effects took effect this summer. And so many of the companies that are announcing rate reductions are doing it on faith, based a lot on the progress that you've seen in Florida, because they're about 2 years ahead of us. And so the companies announcing reductions do not have complete data, but they're seeing what's happening in other states that are taking these important actions, and they're doing it in advance of the risk factors that are dropping. So I want to commend all these companies for giving us a tool that we can use to negotiate with companies. I was telling Leader Hughley a couple of weeks ago when we were down in Columbus is that, these companies are taking, we put a lot of pressure on them. We hold them accountable. We have a good competitive marketplace. And Steve Manders will go into the details of how we reach those agreements on rates. Unfortunately, people in Georgia you know, they hear my title as insurance commissioner, they think I'm the insurance czar. And that doesn't quite equate. And many of the members here of the insurance committee know what my authority is when it comes to settling on rates. And I'll let Steve go into the sausage making of how my authority that you all have granted me to come to agreements and put pressures on companies when but at the end of the day, this is a market-driven process, and I appreciate this committee meeting and discussing a bunch of ideas. We have several suggestions that we made, and I appreciate the opportunity to present those to you all. With that, Mr. Chairman, if you don't mind, if I'll turn it over to Steve Manders so he can expand more on his presentation. Thank you all so much, and be on the lookout for additional news from other carriers on their rate reductions. I'm very happy to be able to announce that. Thank you.
Commissioner King, and thank you for making your office fully engaged in this committee. Thank you. Appreciate it. Thank you. And while Steve Manners is on his way up here, appreciate the folks who've signed up to speak. If, David Hartman, raise your hand, please. If you plan to speak today, please check in with David, make sure you're on the list so we can govern our time today. So check in with David real quick, speakers, please. And Steve Manders presented at the first meeting in August at the state capitol. If you missed that, please take a look at the PowerPoint and that video that he presented there. And he is back today to talk about the insurance rate process, which is the heart of our study committee. So with that, Steve Manders.
Thank you. Thank you, sir. So I guess we'll just dig right in to the rate filing process and what our office does. We receive about 3,000 rate filings a year. That's all lines of insurance, from med mal to surety to auto, homeowners. We receive about 3,000 form filings a year. So that's about 6,000 filings a year that I've got a staff of 15 people that are reviewing those filings. So it's a very tedious process. But I just want to go through, hopefully to educate you a little bit on the actual process, okay? What our laws allow us to do and do not allow us to do, okay? So any rate filing in the state, we have 45 days to act on it. It's file and use. If we don't respond to the company, they can put the filing into effect. All right. That's for every line except private passenger auto. For auto, they have 60 days. It's a bifurcated process. The minimum limits or prior approval. The property damage, comp, collision, or file and use. So we have 60 days to respond to an auto carrier when they make a filing. We can examine each of these filings. On the other lines than auto, that stops the clock. All right. For auto, there's no stopping the clock. So when they make that filing, we have to respond very quickly. So a lot of these filings, let's say they file a 10% increase. Their indication is 20%, they're asking for 10. That filing is supported. I mean, when we send it out to our actuaries to take a look at that, it's supported. So then becomes a negotiation with the carrier. And there's a lot of people in this room that I've negotiated with years and years. I've only been there a short stint, 38 years, but there's a process that we negotiate those filings. So they may file 10, and we may end up at 5, we may end up at 6%. So there's a negotiation process through this. All right. like I said, I've been there a while. There's very few filings that are not supported when we send them out to our outside actuaries. And I commend the commissioner. We are working on beefing our staff up where we can handle this internally. We have to send these out to exam, a lot of them. But so we've got 4 actuaries on staff now. Now, 3 of them are not full-fledged actuaries. They're going through the process of taking their exams. But so money's been appropriated to get us up to date, to get our staff in place to be able to handle this internally. And so it's, like I said, there is a lot of negotiation that goes on. Very few companies that file what they file get what they want, as a lot of people in this room can tell you. But I guess I want to open it up to any questions of what y'all have, you know, from a committee standpoint, from a legislative standpoint.
Let me ask, who's got the PowerPoint? Let's scroll through that.
All right.
Why don't we do that? Just sort of. Okay.
Got it.
Before we do the questions, why don't we just scroll through the PowerPoint? Because that's, appreciate you putting that together. It's really informative. Just anything.
So here's our product review. We do rate filings, roof filings, and form filings. You can see the numbers here, 23, the rates, forms. So here's some of our statutory obligations that we have. So workers' comp is a statutory coverage. You have 2 or more employees, you're required to have it. Of course, auto is a required coverage. And our FAIR plan covers the property. That's not a statutory coverage, but your lenders are going to require you to have. So that we have 3 residual markets in the state of Georgia. So our FAIR plan has about 9,000 policies, about 22 million in premium. Our auto assigned risk plan, 20 years, zero policy. So that's telling us we have a competitive market in Georgia. Okay. So I mean, we have people with 3 and 4 DUIs out there. They can find coverage in the voluntary market. They're not having to go to our auto assigned risk plan. And that covers personal and commercial coverages. We also review rating organizations. Most of you have heard of ISO, you know, from fire rating, class codes. So we regulate, we have 23 rating and advisory organizations. They file stat plans with us. That's how you collect the data to develop the rates. And they also file the rating plans with us. Helene, Georgia's largest event ever. 165,000 claims, basically 2.9 million in claim dollars. There's about 5,000. These numbers are probably about 4 months old. And there's about 167 million still outstanding. So in Georgia, we have 1,700 companies licensed to do business. There's about 400 doing auto and home, and about 500 doing commercial lines coverage. So the one thing I want to bring to your attention is the bottom line here. Companies that have withdrawn from Georgia. I've been through a lot of situations. Affordability is a big issue. Availability is a bigger issue. If you cannot find the coverage, and that's what we're seeing now with some of our liability lines, from personal umbrella, used to, you could go find a umbrella policy, $1 million, $2 million, $5 million. An individual has a hard time going and find a $5 million umbrella now. It's just, the availability is becoming an issue. It's getting better. But as you can see, we've had 36 personal home and auto carriers pull out of Georgia in the last 3 years. We've had 35 commercial auto and property carriers pull out in the state of Georgia. They don't pull out if they're making money. If you're making money, they're going to be in the business. So these carriers made a strategic decision to pull out of the state because they were not making money. So here's one I want to bring to your attention. Look at the yellow lines. This is our private passenger auto liability. All right. Personal auto. You can see minus 18.2, minus 22.9, minus 25.7. You can see over the last 10 years, the carriers have lost 14.7%. You see the physical damage has been profitable, but overall, the private passenger auto is minus 8.4% over the past 10 years. Commercial auto, look at those numbers. Minus 23.2 over the past 10 years. We have about 8 carriers that are providing trucking coverage in the state of Georgia. We used to have 30, 40 carriers that were providing that coverage. Homeowners, minus 5 over the past 10 years. Homeowners is a different animal. Catastrophic losses is what is driving that. Storms, wind losses. And then you look at med mal, other liability, and products liability. So those are all liability lines. Those are not first party claims. Those are liability lines. So I'll let you make a decision there.
Steve, I got 28 accident help. That's for group 24. Is that for small group?
No, that's not the help. That is help associated with like med package. So that's not.
It's an accident help, but that.
Right. That's not your help line. So our laws, you know, every state has this basic concept. Rates cannot be excessive. And excessive is defined in our law is if there's a reasonable degree of competition, a rate cannot be excessive. So that's where we have, and it, you know, if we want to fight a carrier or decline a rate, there's no provision in the law that says we can disapprove the filing. All right, there's nothing in the law that says, so that's where the negotiation comes in. So if there's a reasonable degree of competition, we cannot just say, we're going to disapprove this filing. I disapprove filings. All right. I'm probably out probably not within the actual law. But so a rate can, I mean, that's a big issue is rates cannot be deemed excessive if there's a reasonable amount of competition. Rates cannot be inadequate. Company cannot come in and buy the market. And rates cannot be unfairly discriminatory. Unfairly discriminatory is the bigger issue of all those three categories of the rate making law. Unfairly discriminatory is where we really dig in. Companies have their models now. They, using credit scoring. They're using a lot of different techniques in developing rates. And there's some of the aspects we just will not allow. We're not allow demographic issues to be looked at. I mean, we've had companies want to rate policies. So you're going to get surcharged if you have 5 Family Dollars within your location. I mean, it's getting very, very complex, and my staff is very diligent on looking at those filings to make sure that there's fairness, that it's so. So this is where I was headed at earlier. Prior approval only comes into effect on our auto, private passenger auto, and all forms are prior approval. So forms have to be actually approved by us. And then, so here's some of the items we get into when we are looking at the rate filings is, I mean, we look at the company's expenses, we look at their overhead, their permissible loss ratio, their loss development trend, investment income, any money they make off the investments has to be factored into their rates. So when, say a private passenger auto filing comes in, they're asking for 10%. They're probably going to show about 3% investment income is what we're seeing right now on average. So at the bottom, they're giving us what their indicated rate should be. And most companies take a percentage of their indicated. If they're indicating 30%, they may ask for 10%, they may ask 12%. So that doesn't leave us a lot of room to negotiate because that filing is going to be supported. And
So when you're looking at the rates, let's say State Farm, Allstate, Progressive, where do they fall in that? I'm sure it's not 3%. But what would you say the percentage is? Across the board?
well, are you talking about the investment side of it?
Right.
It's about 3 to 4%.
So $88 billion.
It's still, I mean, I don't know what you're earning. Mine's not much more than that. But the, just because it's a larger number doesn't mean the percentage of your,
9% smaller companies, but I'm not. With that smaller company, you said some were 3%, then you jumped up to 10%, 12%, correct?
no, that's what they're asking for from a rate.
They're asking, they can pay.
Correct. So, no, that's just the investment side is about 3 to 4% is what we're seeing industry wide. So here's some of the cost drivers that we're seeing. Frequency, severity. In Atlanta, population density.
Mr. Manders, if you could speak in the mic.
Oh, okay.
And members, when you speak too, punch the button. That'll
Right.
turn you on, like.
I thought that
Alright.
umpire voice was strong enough, but
I couldn't hear a thing you said. But listen, I'm just kidding you. I've got a couple of questions quickly before you go too far into your slides. First one is, got about 5,000 unpaid claims under Helena. Why and where are you in the reduction? That's the first one. The second one is the use of credit reports for insurance. Couple of things that I've observed, and I don't know how prevalent it is, but I had a person come into my office smoking mad. Credit score of 750, 760. A credit card company from years before that he thought was canceled had a very small outstanding balance that they took several years and they reported to the credit. His credit score dropped 85 points overnight. So his credit rating is not a true picture when he goes for insurance, but it's going to certainly affect him, it sounds like. And I was just wondering, because that's the credit bureau, that's not you,
correct.
but it ends up with you because of that. And in an area like mine where we lost two major employers, there are going to be some folk might get a little behind this too.
All right, so
Why do they suffer like that?
so let's talk about the credit scoring component of. So the credit scoring is a statutory component. It's in the insurance law. Credit scores can be used. Okay. So that was passed 20 years ago.
Here we are today. I mean, the statutory, it could be a new statute. I wouldn't do that.
So where that needs to be battled is with the credit company, the Equifax. There's a way to file for to get that remediated on your credit score. Yeah, yeah, I understand. There's a process, but so I mean that affects our insurance. That affects you getting a loan. That affects, you know, anything in our society. That credit score is on our back. And it's going to affect a lot of things. I mean, it affects your utilities. It affects a lot of different things out there. And so now we do have some safe havens in the insurance law where if it is, say, a medical related item, you can dispute that and get that taken off, and the insurance company cannot use that against you. So there is some areas in the insurance law that can give a consumer help. But what you're talking about is a debt that's showing up from years ago, and it's showing up as not being satisfied, and it's hurting the credit score. That has to be challenged at Experian or whoever the credit agency is. But from an insurance perspective, the credit score can be used. It's statutory. I mean, this body passed that 15 years ago. And it's in the law. It's got its own, it's codified. It's, you know.
Okay. Don't forget the unpaid claim.
So those numbers were older. Those were 5 months ago, 6 months ago. That doesn't mean those claims haven't been handled or addressed. They haven't been settled. All right, so those claims may have had $200,000 paid out on it, but the consumer is still challenging $30,000 or whatever. So that those are not closed. That doesn't mean they haven't been addressed or handled. They haven't been fully closed. So does that?
It helps some.
Okay.
I should have said that initially. It didn't sound good the way you
But,
said it.
I mean, we deal with a lot of y'all, your constituents. I thought the process went fairly well for the size of the loss Helene was. We got complaints. We didn't get a lot of complaints. Comparatively. I mean, because I checked with our consumer services division. I mean, we have a 40-person team that handles consumer complaints. And a lot of y'all have dealt with us on that stuff in the past. And we're there. If you need us, call us. We can get you taken care of any of your. So how many people here have constituents that are having issues with lien claims? I know you do. So
Bottom line is $12,000 roof, you get paid $4,000. That's a problem. They bought into insurance to cover the losses. And all of a sudden, the losses far exceed the payment. That's a real problem. Yeah, well, most of them ain't got a $10,000 deductible. I mean, working people have, the deductible is usually $1,000 down.
It
for
might
work.
not be the whole,
Huh?
it may not be the whole roof.
But now,
that's involved.
I understand, Madam Leader, and what I'm saying is, in reality, not just in my district, but I've got a lot of calls. And Helena, most times, didn't take a little piece of a roof off. And when the adjuster says that it's this, and the insurance company pays that, it's a problem. You got $12,000 roof, you don't expect to get paid $4,000. Even in a new car, you can adjust the pay. But I'm saying, yeah, I've heard a couple of explanations, but it's a real problem for a person who's a working person and thought they had $12,000 worth of coverage and only got the porch and garage covered.
Can I ask a couple of questions?
Leader Pugh.
yes,
Um,
yes, ma'am.
I want to take you back to what you said about staffing. What is the plan for bringing the actuary staff up to where it needs to be so that you're not sending these things out so that we can improve the process when these rate filings are done?
So we've put in a program. I've got bronchitis, so just hang with me. But so the commissioners put in a program where, so to become an actuary, you have about 12 exams. You have to, it's like sitting for your CPA. You sit through the actuarial exams, and there's about 12. So we put in a program where it's not a bonus, it's a raise. So $4,000. This individual passes this exam, he gets a $4,000 raise. So we've got a system in place now to incentivize our young guys. We're utilizing University of Georgia and Georgia State, which both have insurance risk management departments, and Georgia Southern. And so I've got 4 new hires from those schools that are going through the actuarial process right now.
And so do you think?
So that's it's almost like succession planning. We're trying to get our folks.
So how long before?
Well, you've been there quite a while also, all right? And
Though, is it gonna take you to get a new person, regardless how smart they are, from Georgia State or whatever, up to speed in order to do these?
about 4 years, about 4 years.
About 4
Yep,
years.
yep.
A second question for you is on your carrier withdrawals, are you all keeping up with the reasons for those withdrawals and to make sure that whatever the deficiency is in the marketplace that caused them to
So if it's,
addressing?
ma'am, it's just like when a carrier files for a rate increase, a withdrawal, they have to file with that. It's under our Unfair Trade Practices Act, 336512. They have to file with us that they're withdrawing from the market. If they're going to non-renew the business, they have to file that with us. We have very little authority to say, no, you can't withdraw. We can't force a company to write business. You know, we don't have that statutory authority.
That's not my point. My point was, are we keeping up with the reasons such that if there are deficiencies in our marketplace, we can adjust those deficiencies? That's my.
Yes, we are.
That's my.
That's all documented in each of the filings and 99.9% is we're losing our, we're not making money and we won't cut our losses and get out. And that's bottom line.
Thank you, Leader Hughley. Chairman Gullett.
Thank you. Thank you. Do we have a competitive market in Georgia today with insurance?
I say we do. It's tighter than it's been in some time, but we still have a competitive market. Just like our auto plan, we have 0 policies in our residual market. So it's hard to argue that we don't have a competitive market when we have 0 policies in our residual market. So that's the market of last resort. And workers' comp, we're fairly competitive, actually real competitive. Workers' comp's probably been our best line of insurance in the state over the past 20 years. Homeowners property has been a challenge. Our liability coverage has been a challenge. I still think we're competitive, but we're not as competitive as we were 15 years ago.
Okay. So, I'm gonna bounce around because you said a lot. I'm just trying to cover through. When you said when we were looking at losses and that, it was 15% on average or 14 point something% on average for, I think, for auto. I can't remember what homeowners were, but does the losses include the gains they made from invested income, or is that just strictly losses? Yeah. So
well,
that's the total, including investment income.
When a carrier is making a rate filing, they have to legally put in their investment income. They have to take that in consideration in their rate filing.
And it includes their advertising expenses as well, right?
Yes.
So State Farm Arena, whatever cost for that includes as an expenditure out.
That's included in their expenses. Yes, sir.
One last question. This is really about what Commissioner King said related to some of the rates coming down. I think I read in the paper, State Farm has introduced it. I don't think that we've had any meaningful court decisions based since tort reform has been law. Maybe I'm wrong. I'm not a lawyer, but I don't think so. And then 3 months ago, I think we heard, to my surprise, it's going to take 3 years really to realize the gains from tort reform from the insurance premium rate. And then I think even last time you spoke to us, it was really, we have right here, what are cross drivers and what you have to look at when you approve rate increases. Although you say you can't not approve them, basically you negotiate and try to make it fairer. But if we haven't had any court decisions based on tort reform yet, sizable court decisions based on tort reform yet, the market hasn't really changed yet. How are these companies reducing rates sooner than the 3 years that we advertised?
So
like Do they have fluff built into them to say,
Let's go. See the third from the bottom, trend,
okay,
all right? So trend is things that could affect the market. Let's say it's tariffs, or let's say it's supply chain issues on parts. Or so the carriers are looking at future, what they think may happen. So these are outside forces that haven't happened yet, but they know the law's passed. So now they're making a business decision to reduce rates because they feel like.
but it seems like, I hear you, and I believe that could be part of it. I don't think it should be, we have a law that's passed. We haven't seen the results of that law yet.
And some of it is probably just, like the commissioner said, a good faith effort on them that the law passed, and let's reduce our rates a little bit and let's see how this is going to work.
And I'm happy to see the rates coming down. I don't want to argue that point. I think we all are in this room. That's what we're here for. It just seems like maybe there was some fluff built in before in order to, we haven't seen anything that's changed yet. We see that, hey, maybe we're going to see a roadmap. I think, hey, we're going to build this highway. This highway is being built.
Remember the chart I gave you with the 10 years experience? There's no fluff in there. Those were actual company numbers. So there was no fluff in a minus 14% over 10 years. That, you know.
I hear you. I believe you think that. I'm not sure if I believe it.
Fair enough.
All right, thank you for your.
Thank you, Mr. Chairman. You said 36 home and auto companies have left the state and 35 that basically is commercial and auto property. With that, do y'all investigate? I mean, I was in trucking logistics, my main company. There were companies going out of business every year because they weren't very good at business. Do y'all go back and check the guys that maybe they spend more than they bring in, which is most people's problem? You know, they have Mercedes in every garage and their dog has a 3-bedroom house. When I'm saying that, there's businesses that continuously mismanage money. Do you go back and check that, or you just say they left?
Go to bed with
We don't get to that. We don't get to the individual.
So you don't really know why they left. You're assuming that it's because of what's going on. Really, you don't know the true answer why they left. Some probably it affected, some probably mismanaged and was very poor at business. Would you agree to that?
I agree to that.
Okay,
There's some carriers that
right.
have mismanaged.
They're not like Chairman Williams over here that just has money coming out of the sky because he's a good manager of his business.
But
Which Williams? No, thank you. I
But-
figured that was the answer, but thank you.
But most of the carriers, when they're withdrawing, it's because they're losing their shirt.
But it could be.
And it could
mismanagement.
be
That's
mismanagement on their part. Yes,
There
sir.
you go.
I agree.
Thank you.
Representative Jackman Ford.
Is there any way we could get companies to stay or require them to do a contract or be here for so many years before they can, or are they able to just come and leave as they like in different segments?
There's nothing in the statute right now that prohibits that. Now, if a carrier leaves, I don't say we sort of have a desk order rule. You're not coming back in. You're not withdrawing and coming back in next year.
Yeah.
We're not going to let you do that. We're going to let you sit out about 5 years before you come back in.
Well, we kind of need them back though in some areas where we only have like 1 or 2 choices. In ag, I know in some of our areas, we only have we used to have 4 or 5 choices. Now we have 1 or 2 choices, and it feels like they're just coming and going like they please. And, you know, like you said, if they feel like they're making money, or I feel like they're making money, but
Are
maybe
you
they're
talking
in
on property
certain
casualty side or like
Yeah.
outside?
property and casualty.
Okay.
So I think we could do a better job of making them have some skin in the game when they come and do business in our state.
Any other questions for Mr. Manders? Anybody else? Okay, couple of, you
Just have
good?
one more, but
Okay, go ahead. No, go ahead.
this is related. It made me think about it with leaving the market. We have like the Big 10, right? I think it's around 10 big insurance players in the market. You got Nationwide, Allstate, State Farm, and then you have some of the smaller ones out there. The big ones have money to advertise, right?
So our top 10 writers in auto, top 10 writers in homeowners write about 70 to 75% of the business.
Okay. So when you advertise, you're getting market share. They have market share for sure. And when you're a newer insurance company out there, do you believe you like they, in order to get market share, they're basically taking riskier clients because the advertising market share is so heavy? So when you think about insurance, you think about the big, I'm not sure if it's 10, big 12, whatever it is. And so the smaller segments basically have to take riskier clients because the big ones probably went to the big ones first because of just the advertising.
That's a challenge for us on the smaller carriers that come in. We want to make sure they stay solvent.
Yeah.
Because you don't want a company, because in Georgia, we have a insolvency pool. So if a company goes under,
You gotta take it.
the insurance claims are going to be paid. It's going to be surcharged to all the other companies out there.
Right.
All right. So that's a challenge for us. We have these startups in Florida, writing coastal business, coming in. That's a whole process that has nothing to do with rates. It has to do with financial side.
Just bringing people into the market.
And so that is a challenge for us.
Is it a challenge for everyone? Like, are we unique in that? Is it a challenge?
No, that's for every
Has
state.
anyone got it right? That you believe, some states
Well,
doing that well?
Insurance business is still a competitive business. It's not, companies can come in, can leave the market. All right. It's competition. So we have to regulate their financial side. They have to file annual statements with us, quarterly statements with us. And on the property and casualty side, we've had very few insolvencies. Life and health, we've had a couple. So it's, and some of that's federally driven through the ACA. But Scott Sanders, a guy, our director of our finance side, financial oversight, he does an excellent job. So that is a challenge to make sure these companies are solvent, because that's the last thing you want, is one to go under and then have to surcharge the carriers to.
But it's hard to get started when, the marketing from the big, basically it's hard to get started as a startup as well. And so we
Yeah.
want them solvent, and how do you?
Because there's a lot of expenses on the front end when you start a new company. So.
Thank you.
Thank you, Mr. Chair. I just wanted to add to this conversation that smaller companies have one advantage from my perspective, and that is they have more of an opportunity to do innovation. And then the larger companies have to kind of catch up. But so if they have a very novel idea that they can bring to the marketplace, then they can be successful and the larger companies will catch up. For example, some of the smaller companies came to the marketplace with different ways of making rates and that kind of thing. And then the larger companies had to play catch up in the market. So that is an advantage that a smaller company has, that larger companies have to sometimes play catch up.
And it's IT driven.
Yeah.
The newer companies can adapt a little more. The larger companies a lot of times have their archaic computer systems, and it's hard for them to adjust. And so we're seeing now we're seeing AI, we're seeing a lot of different things come into the marketplace. And some of the smaller companies are more IT based and can adjust quicker than some of the older companies. So.
Any other questions for Mr. Manders? Representative Dunhoo.
We talked about how many government left, how many get that back?
Probably about half of those numbers. We've got new entrants, yes. We are seeing a lot of, I don't know how familiar you are with Florida and their coast, okay. So they've got a lot of new startup companies, and those companies are trying to diversify. They're trying to not only write in Florida, they want to go to Georgia, Alabama, North Carolina, South Carolina. So we're starting to see some new entrants into the homeowners market, high value coastal property writers, which is a good thing, but those are the ones we are keeping an eye on from a solvency standpoint also.
Now, I think you're first needing to revise,
Chairman Reeves.
About that. With Florida,
Turn it off.
You turn it off. So with that, what happened was he proved that they were paying out 61.7% claims. Pretty large market of 39.9% profit. The main guy in the company made 27 million. His wife made 21 million. Everybody's not like that. We understand that, but he proved quite a few companies that were. How do you evaluate some of these companies and their profit margins? Now in business, I don't need government coming in and telling me my profit margins. Never did in my companies, but I'm not demanded to have my companies at that time by law that I have to buy insurance, but they didn't have to use me on my rate tariffs. They didn't have to use me on my storage fees. That's the thing I want to know is how do we mandate controlling the people that are taking advantage of people?
That's where that's where we get involved. We look at their expense ratios. So all the salaries, all that's reported on the annual statement in their expense ratios. Homeowners runs about 35 to 38% expense. That's company overhead, salaries, rent, and so
Advertising.
yes, everything's included in that expense ratio.
Right.
All right. Auto's about 25 to 28%. So we know that we get every company's expense ratio. We know the average. And if a company files something that's 50%, then we start asking questions.
Thank
you. All right, we have Chairman Bruce Williamson on Zoom.
Let's plug him in. He has a question for Mr. Manders.
Thank you, Chairman. Can you hear me okay?
We can hear you just fine.
Okay, so getting back to the distribution channels, and Mr. Manders is correct about the whole new world of IT and availability. Most younger people are searching the best deal for any kind of products they're looking for, specifically automobile insurance, renter's insurance, homeowners insurance on the internet, and there are a lot of new providers out there. But in addition, Representative Gullett was talking about the distribution channels being handled mainly by the larger direct writers. I think what we failed to point out is that there is still a major distribution channel in the independent agencies across Georgia that don't represent, their first obligation is not to the insurance companies, but they contract with insurance companies, and their first obligation is to the policyholders. Independent agents, which that was my background, serve a valuable role in this distribution process, and they can represent the smaller companies that they vet, make sure they're AM Best rated, they have the sufficient ability to pay claims, and they're authorized to do business in the state of Georgia. But it's we have a great ecosystem, I would argue, in that we have
good reputable direct writers that have been in the business for many years with Farm Bureau, State Farm, Allstate, and Geico and others. But the independent distribution channels do offer a lot of flexibility and pricing options to mom and pop businesses and households across Georgia. I wanted to make sure that point got made in this discussion.
Thank you, Chairman Williamson. I see a few independent insurance agents out in the audience who I think we're going to hear from shortly. And we've got several members on Zoom, Todd Jones, Sue Hong, Michelle Au, Trey Kelly, Shaw Blackman, Sarah Critton, his legal counsel, legislative counsel, who's working with this committee. Do we have questions from any of the members on Zoom other than Chairman Williamson? All right, we appreciate y'all participating by Zoom. Mr. Manders, a couple of things. You mentioned constraints of the law on rates. Definitely talk to the commissioner and everybody at the Department of Insurance. If there are constraints in the law on your ability to handle rate issues that you think would benefit a healthy market and affordability and consumers in Georgia, definitely let us know if there are any things that you need statutory changes on that other states have that we don't have here in Georgia that have arisen. One thing that came up in a previous meeting was how limited of an effect that violations, fines, complaints, delinquent claims processing, there are limitations on how that plays into the rate process. If there are any things in that regard that we ought to look at on legislation, definitely let us know. But appreciate this thorough presentation. This whole thing about Hurricane Helene claims, I appreciate the statistics on that and the discussion you've had today. I'd just like to put our next meeting December 18th out there, if you wouldn't mind working with the department, and let's quantify how many claims are left and hear from y'all December 18th.
Okay.
And I will say to the companies who've got claims still hanging out there on Hurricane Helene over a year later, the longer that list is of outstanding claims, the more we're hearing from constituents, the more legislation there's likely to be. So let's get those Helene claims done so that we don't have folks in need of legislative action on that. Let's get it done. We did a better job on Helene than some storms in the past, but let's get that list down. That's mainly out there.
That'll take we got that data from a data call. We did a data call out to the top 12 carriers.
Sure.
So I can get that updated for you.
And definitely members, if you've got constituents who were affected, let's get specifics on it, do constituent services, and we'll work with the department on that. Complaints and fraud, I've heard various statistics on that. Give us an idea of the volume of complaints that the department receives. And then also on fraud, the volume of complaints you get about fraud.
It's sort of hard to really define what's an inquiry and what's a complaint. Okay. And so there's judgment in that. We get about 40 to 45,000 calls at our consumer services division each year. Okay. A lot of them are just general questions. How does this work? How does this process work? Some of them are legitimate complaints. And so we have a portal. You can go online, and so we have everybody go online to do their complaints. That way we have a record of it. We categorize each one of those complaints by line of insurance. So we have the stats on that. So a lot of our regulatory actions on carriers, like we can examine a carrier. If we see a problem, claim problem, we can go in and do an exam. That comes from our consumer services division. We look at those numbers, we look at the matrix to see if, if you're the largest carrier in the state, you're probably gonna have more complaints just because of the numbers. But we look at the percentages, we look at the reasons why each of those claims are being made or complaints being made. And so we've got 3 market conduct exams going on right now because of complaints received at the department. So
Thank you. And it was great to hear from the commissioner earlier and this week about State Farm. Definitely companies who are cutting their rates, let us know between now and December the 18th. Just like State Farm got some good publicity on that today, we'd be glad to spread the news.
there's
About
probably
rates
going to
going
be a
down.
few more coming out in the next few days.
Well, you know, that's, I don't know how many study committees, have gotten good news before they do the report and legislation and all that, but that's good news. But there's a lot of work to be done.
There's about 6 or 8 companies, I think, have filed decreases.
Okay. So let us know. We got a letter from State Farm that the commissioner's gotten out there about their rate cut, and we'd like to get a lot more, and appreciate y'all, y'all's efforts on encouraging that. Any other questions for Mr. Manders?
I have one last question, and you briefly mentioned fraud, but I would be interested to hear the extent of fraud and how that is adversely affecting the rates that we see in the marketplace.
I don't know exactly where we rank. You want to come up, Bryce?
All right. Give that man a raise.
Thank you, Mr. Chairman, members of the committee. My name is Bryce Rawson, Director of Legislative Affairs for the Georgia Insurance Commissioner's Office. Just to touch briefly on that topic, Madam Hughley. So Georgia right now, according to the National Insurance Crime Bureau, we rank 3rd in the nation. Yes, sorry about that. We rank 3rd in the nation in terms of questionable claims in accordance with the National Insurance Crime Bureau and their research. So that means that Georgia is ranked 3rd overall in how much insurance fraud that we experience in our state. We actually do have our criminal investigations division. So that is a team of about 35 agents who all they do all day is they investigate insurance fraud. They handle about 10,000 reports each year. Most of that does come from insurance companies. And the amount of cases that they do, our agents are typically handling anywhere between 10 and 20 cases at one given time, just by given the amount of agents that we do have and the caseload that we are given.
When I first started with the department, or not, but we had 1 fraud investigator. Now we have 35.
Wow.
All right. So it has been a big issue with the commissioner to address. Some of it's agent fraud, some of it's, fake accidents. Arson. There's just multitude of things out there that, like I said, each of our agents have 15 or 20 cases they're working on at any given time.
So are you finding that the nature of fraud has changed? I've been an agent for a long time, and it used to be staging automobile accidents, and now we have people that go online and ask for insurance, and before their payment can process, they cancel, and then they get a receipt for a refund for having canceled the insurance that they actually never paid. So the things that are happening in the marketplace now are much different than what they used to be. And so how are you able to keep up with the?
A lot of this is attributable to the online stuff. We do a lot of stuff online. I pay every bill online, and so there's a lot of new insurance companies coming in that are online. You don't even talk to, they have agents, but they're, you go to Hugo or some of these other, insurance companies out there. So having the online process is causing a lot of the fraud. It's more financial. It's not so much staging accidents. It's more on the financial side. And that's hard to prosecute. It really is. And then we also run into situations where we have a hard time getting a DA to sign off on a case you know, it's a white collar crime. It's no big deal. But at the end of the day, it's a big deal to me, you, and all of us, because we're paying additional premiums.
Yeah.
Yeah.
Well, I'm gonna try to get my DA to the Gwinnett meeting, definitely talk to your DAs. Y'all talk to your 35 investigators, on the issue of fraud. If there are more criminal, statutes we need, we can take a look at that. If there's anything to catch up with some of the sophisticated, fraud that's out there, let us know. One thing, uninsured motorists, talk to us about the volume of uninsured motorists and if there's anything we need to take action on uninsured motorists. We got one bill pending, House Bill 585 by Speaker Pro Tem Jan Jones about the excluded driver modus operandi that some people are using that, you know, puts uninsured motorists on other people's policies. And then former Rep Ken Vance, when he was here, he put House Bill 447 last term, which had allowed police to do more license plate scanning to detect uninsured motorists. That's still not in effect. That's not in law, but those are two concepts. But what's the volume of uninsured motorists? Is there anything we need to do?
We probably need to go to driver services for that, but I mean, the numbers I hear are about 12 to 15% drivers out there that are uninsured. Both. Well, not insured is what I'm talking about. All right. Not at all. Underinsured is a different issue. I mean, that's a personal thing to each individual of how much insurance you want to buy. I mean, I had a daughter that just went through a head-on collision in a underinsured situation, you know, and so it's but for not insured at all, probably about 15%.
Help
Or the
us
drivers.
identify things that would help statute-wise if you need to steer folks towards getting from totally uninsured to having insurance, because folks in my area, they get the impression they're paying for others who are uninsured. That's part of these increases. So show us how to
Well,
take some action.
I can tell you this, the uninsured motorist rates have increased significantly over the past 15, 20 years. So that's telling us that the uninsured rate is going up. I mean, the number of uninsureds is going up. Now, driver services has, you know, they have a geeks, all the insurance companies report, you know, if a policeman pulls you over, they can pull you up and see if you have insurance. You know, it's right there on his desktop in the car. So
But the excluded driver is not. That's President Pro.
Correct.
Speaker Pro Tem's
Correct.
bill that.
and
you know,
excluded drivers under case law is allowed. A driver. I got a son that's got 2 DUIs. I can exclude him off my policy.
But you don't give him the keys. You don't exclude him and then give him the keys in the car.
But people do. That's
Right.
That's the
And
issue.
And that's
the issue.
Don't exclude them and give them the key in the car and shift them onto somebody else who's
Correct.
uninsured
Yeah.
motorists there. That's some of the highest risks and
And
claims. So that's.
How do
that's
we
one
police
thing.
that? You know, how do we address that? I mean, that's an issue.
Question. I understand it. It would be a challenge, but it would not be that tough when a person is caught. It's about like not securing your firearm properly. And we've had prosecutions of careless people. And that can be even worse. When you've got an uninsured driver out there, you really got a mess. But if you're in the house and they're in your house, then you track it right back to them. And it has to be done like that.
I'm gonna try to say this politely.
We don't try to.
Our judges need to step up.
Hey, you shouldn't have
Yeah.
to say that politely. Because that's
Yeah.
exactly where I'm headed. When you find that, then there ought to be consequences and serious consequences.
Yep.
Mr. Manders, you've been so informative, not just today, but back in August. Thank you for spending
Thank you.
time with
Thank
our
you.
committee, and we'll stay in
Thank
touch.
you for not making me drive to Atlanta today.
All right, all right. Thanks so much. All right. All right, here's what we're about to do. We're going to call on several people who've signed up to testify, and then we're going to do the premium tax discussion after that. Hopefully we can get that between now and lunchtime. So before I do that, I've mentioned who's tuned in by Zoom in terms of members, but let's just go around, introduce yourself, tell us where you're from.
Noah Williams, Cordell, House District 148.
Karen Mathiak, Spalding and Fayette, District 82. Carolyn Hughley from God's Country, House District 141, Columbus.
I'm Clint Crow. I'm actually not on the committee, but I'm represent Monroe County just north of here, Butts and Newton, and Chairman Reeves was kind enough to invite me to come down and sit in and listen for a little bit.
Al Williams from Liberty County, and Noel is only a third cousin, so he doesn't count.
Eddie Lumsden, represent District 12, Floyd and Chattooga counties. I'm from Rome.
Jacqueline Ford, representing Berrien, Cook, and Tift counties, District 170.
Joseph Gullett, representing East Paulding and West Cobb County, District 19.
Emory Donahue, District 31, Jackson County, Hall County, and live in the big town of Gillsville, Georgia.
Matt Reeves, Duluth, Swanee, and Sugar Hill up in Gwinnett County. My district is right across the street from where our next meeting is, December the 18th.
Oh, isn't that convenient?
That's right. Right. Hey, Gwinnett County, we got 1 million people. We got 22 House members and 9 senators. So what we lack in quality, we make up for in quantity. I'll assure you that. And speaking of locals, we got some Maconites here today. So I'll call on you first. Mike Kaplan. Mike Kaplan, come on up. Well, Mike is coming out, mostly a week ago, mostly in, I think the office, big presence for 2020. Right.
All right.
Mike, tell us about 10 minutes of the food.
Thank you very much. First of all, I'd like to introduce myself. My name is Mike Kaplan. I'm an independent agent that Representative Williamson was talking about here in Macon, Georgia. I graduated, thankfully, from the University of Georgia in 1975 with a risk management and insurance degree. And ever since then, I've been selling insurance. I started in the property and casualty business in 1980. And so for 45 years, I've been selling insurance, which is a long time to do anything, I know. And I know I don't look that old. I started when I was 16. I wanted to talk a little bit about what he said, what differentiates a direct writer from an independent agent. Direct writers like State Farm, Allstate, and where we are now, the Farm Bureau, which is a fabulous company, by the way. They have direct writers. People go direct to them. Independent agencies, we represent a multitude of companies. And competition is my friend. Because when my clients come to me, they ask me to get the best rate possible. And the more companies I have and the more availability I have, the more competitive the marketplace. The last 5 to 6 years has been the most difficult time that I have ever seen my clients in the insurance marketplace. In 2023, we saw Donegal Insurance Company pull out. In 2000 of the commercial side. In 2024, we saw Central Mutual, which was a mutual company, mutual companies are different from stock companies. Mutual companies are owned by the policyholders and tend to be a little bit more fun to deal with. Stock companies are in it for profit and are profit-making companies and are sold in the New York Stock Exchange. So that's the difference between the two. The Georgia marketplace, as we all know, has been very unprofitable for the last few years. I'm not here to talk about tort reform. I'm not here to talk about any of that. I'm just here to tell you what's happening to my clients. I'm here to tell you that their automobile insurance, and especially on the commercial side, has gone up exponentially over the last 4 to 5 years. Umbrellas now, I remember when I started, everybody had a personal umbrella. We They encouraged us to sell them $200 a piece. We could get $1 million umbrella. Those are very expensive now. Our net worth clients that are in marketplace for umbrellas of 5 million or more are just can't find it, especially if they have a claim. And that has helped hurt our market and hurt my ability to help my clients. Homeowners premiums have gone up exponentially again over the last 3 to 4 years. Commercial auto rates, truckers, as he said, there are only 8 markets now that write truckers. Truckers that were spending $4,000 to $5,000 a year on insurance are now spending upwards of $15,000 to $20,000. A lot of truckers are going broke. A big one filed for bankruptcy, I think, several weeks ago. Tort reform has helped some. We have seen some of my property casualty carriers get back in the market. Safeco has, we were limited. Some of our insurance companies would limit us to the number of automobiles we could write a month, how many homeowners we could write a month. Some people didn't actually pull out of the money of market officially, just rated themselves out because they didn't want to write anymore in Georgia. And they didn't want to go through the process of pulling out, so they just said, we're not interested. The umbrella market is a disaster right now, especially for higher limits, especially for commercial line folks that are driving down the road. When consumers have choices, I can help them. The market is showing signs of healing somewhat. They've had 10 years of losing money in this state on pretty much all lines. Homeowners are a completely different reason, in my opinion, than auto and umbrella. And while the market is showing signs of healing, Florida took several years for the tort reform that they passed to actually take effect. And we've only been at it about 7 months now. And miracles do happen, but not this fast. I would urge this committee to be thoughtful about what you do. All of your constituents, everyone you have, has had tremendous increases in their insurance product. Their insurance has become a major part of their household expenses right now. And if they're not paying attention to it, they're in trouble. I fully believe, somebody brought this up, and I don't have any statistics to prove it, that there are more uninsured motorists now driving around the state than ever, simply because of affordability. Uninsured motorists is actually underinsured motorists. We can't tell our clients what to buy. At my agency, we encourage them to get certain limits, but we can't make them get certain limits. People that call in mostly that don't have a local advisor, they're just calling in to say a Geico, end up with a smaller limit than they maybe need. And that's where we are in the marketplace. I encourage you to think about what you're doing and to do the state of Georgia a big favor by continuing this and stop over-regulating and let our insurance companies do their job so we can do our job. I'd love to take any questions if anybody has any. Like I said, I'm not involved in tort reform. I'm not smart enough to do what you guys do. I've been selling insurance my whole life right here in Macon, Georgia, and I just know what's good and bad for my clients.
Thank you, Mike.
Yes, sir.
Representative Williams.
Yes, sir.
Thank you. I enjoyed your statements, and I want you to know, as tough as it is, the looks of that suit, you did pretty good when you were.
Well, I must tell you, this is a rental, and I have to have it back by 1 o'clock, so I need to get out of here. And so, as soon as you're finished, I got to get it back. Well, I'll be honest with you. We do treat, we try to treat our clients like we're their fourth professional. Everybody needs advice in life, and insurance is a major part of our client's household right now. And if you're not paying attention to it, then you need to be. But thank you, Phil. I thank you for complimenting my suit. My wife will appreciate it.
Representative Mathiak has a question.
Thank you so much for being here and helping host us here in Macon.
And by the way, welcome everybody to Macon. I love Macon. It's a great town. Thank you for coming.
Thank you,
Chairman.
Thank you. Do you have any kind of advice when we're insuring our children when they're getting their driver's licenses?
That's a great question.
I'm hearing horror stories.
And the horror stories are true. The things I can suggest to anybody that has teenage children is to make sure they get some sort of driver's education. That'll give them a discount. You make sure that you get them good students or good student discounts. And so tell your children to study hard. Men cost more than women. And that's pretty obvious. You know, how many times you heard a 16-year-old, hey, y'all watch this. And that's what happens. The problem we have with teenage operators in your family, that's the biggest exposure you have in your life is your teenage son or daughter driving down the road with a vehicle that can kill somebody. And that's why our umbrellas are so important to us and to our clients. Any advice I can give you is don't buy them a big fancy car. Let them drive something that's, the liability is going to be the same on no matter what kind of vehicle you get them. But let them take driver's education and let them make good grades. And besides that, you just got to pray at night. Right. They can what? Right. And they also, for the first year, I don't think they can carry a passenger unless it's related. So there are a lot of restrictions. You're right, Mr. Chairman, about that.
Mike, thanks so much. Any more questions for Mike Kaplan? Appreciate you coming today. All right, we've got another Macon night, Josh Carroll. Come on up, Josh.
So first, I want to thank Chairman Reeves for chairing this committee. I want to thank the hard work this committee's doing. My name is Josh Carroll. I'm a lawyer in Macon. I'm also currently the president of the Georgia Trial Lawyers Association Post-Tort Reform, which is a lot of fun. But before I get started in what I want to talk about today, I want to thank Georgia Farm Bureau too for hosting us today. I'd like to point out that Georgia Farm Bureau has always been one of my favorite insurers to deal with. In my 18 years of practice, I feel like they have quality claims handling practices. They're generally very reasonable, and most importantly, they care about their policyholders, which is what insurance should be. So I'm going to give you a brief overview of the items I plan to cover today, and then we'll jump right into it. Before I do that, just two things that I hope this committee will also take into account based on a lot of the data we looked at last year. It seems to me that in the auto realm, the two big drivers that are driving auto rates in Georgia are we have double the amount of wrecks in Georgia of the national average, which is amazing. That's really a breathtaking statistic when you think about it. And the second is distracted driving. We talk about rates rising in the last 15 years. What did we start having in our hands, and that our children started having in our hands, and that everybody has in their hands in their car, which they shouldn't have in their hands in the last 15 years? We've got to do something to address those root causes if we want to fix this issue. So what I'm going to cover today are just a few things. You know, we've talked about rate issues. I want to talk a little bit about some claims handling issues that we encounter that we think there are some solutions for. The first is the current state of uninsured motorist bad faith in Georgia. As we talked about, uninsured motorists are all over our roads right now. The second is auto property damage bad faith practices. And then the third I want to talk about is the emergence of what I believe is illegal pay-as-you-go liability auto insurance apps, which are also popping up everywhere. So I'll start with uninsured motorist auto coverage and bad faith. In Georgia, when we refer to uninsured motorist coverage, as Mr. Kaplan said, you have both uninsured and underinsured motorist, and that those terms are used interchangeably. So this is optional coverage that you buy for yourself or your family to protect against either a driver who is uninsured, driving around with no insurance, or a driver whose insurance limits are not high enough to cover the damage they cause in a collision. I'm going to refer to it as UM from here on out. So when I say that, you know what I'm talking about. It's uninsured or uninsured motorist coverage. So I want to go through one example. This is a hypothetical of how uninsured motorist bodily injury coverage works in Georgia in a fairly common fact pattern. So let's say Jane's involved in a wreck with an at-fault driver who runs a red light. Jane sustains a fractured leg and incurs $75,000 in total medical expenses and wage loss. The at-fault driver is an unlicensed illegal immigrant driving his friend's vehicle. liability insurance company for the vehicle the illegal immigrant was driving in that situation is going to deny coverage under the policy because there is an unlicensed driver. The immigrant didn't have a valid driver's license. But Jane and her family had the foresight to purchase $100,000 in uninsured motorist coverage for a situation exactly like this through their own auto insurance policy. So Jane's lawyer gathers up all of the documentation to prepare the claim, sends it to the UM insurer. And this type of demand, when we make it on behalf of a client, is done under OCGA 33711J. And that's the uninsured motorist bad faith statute. We make it as a bad faith demand because it gives the insurer 60 days from the date that they receive it to make a claims decision, to review the claim, investigate it, and decide whether or not to pay Jane's $100,000 in uninsured motorist coverage on this claim that we said where she broke her leg and she has $75,000 in out-of-pocket expenses. So for whatever reason, in this scenario, the UM insurer, who Jane and her husband have paid premiums to for 10 years, comes back with an offer of $70,000. And Jane is like, are you kidding me? I mean, really, you're going to offer me $70,000? And so she talks with her lawyer. They file suit and they put it in court for a jury to assign a value to that case, right? So this is where I hope everybody will listen, because when I first became a lawyer, this blew my mind. And I know if you're not a lawyer here, this may blow your mind. Jane's lawyer tells her that under Georgia law, Jane has to file her lawsuit only against the illegal immigrant, and not against her insurance company, who is the one who's refusing in this situation to pay it. And there are policy reasons behind that. But that is dumbfounding to a lot of my clients when I tell them, well, listen, we're going to have to sue the guy who doesn't have any insurance, and your insurance is then going to be able to stand in that person's place and defend the case in their name. So under Georgia law, that gives Jane's insurance company two options. Like I just mentioned, they can answer in their own name as, in this case, we're going to call them Obstinate Mutual. Now, in reality, I don't think Obstinate would be a mutual company. This is probably not a mutual company, but that's what we're going to call them for purposes of this hypothetical. So and then the second option is they could answer the lawsuit in the illegal immigrant's name. Now, generally what happens is, in 99% of the cases I handle, is that the insurer will first answer in their own name, and then we'll conduct discovery, we'll get the case ready. And then right before trial, the insurer switches into the name of the insured, because theoretically it's a lot easier to defend a case in front of a jury if you're not an insurance company. So Jane's lawyer and Obstinate Mutual's lawyer, they exchange their documents, they conduct their depositions, they get ready to go for trial. Obstinate switches to the name of the illegal immigrant. So when the trial starts, the jury knows the case involves Jane versus Mr. Immigrant, but the jury's not allowed to have any evidence or know any facts about the fact that Obstinate is the one that's really driving the train here. So all they know is that Jane is suing Mr. Immigrant for damages. Well, regardless, the trial doesn't go very well for Mr. Immigrant. The jury awards Jane $300,000. Now, remember, Jane only had $100,000 in uninsured motorist coverage. So after the verdict, Obstinate's lawyer calls up and says, hey, listen, I got some great news. We're not going to bother with an appeal. We're just going to go ahead and pay Jane the $100,000 policy limits. And Jane's lawyer kind of laughs and says, are you kidding me? I mean, Obstinate could have paid the $100,000 2 years ago, and saved everyone the time, the expense, the trouble of this trial. By the way, we also sent that bad faith demand 2 years ago, and Obstinate refused to pay it, knowing that Jane was hurt really badly and that a jury was likely going to hit this Mr. Immigrant for a lot of money at a trial, but based on the fact that she has permanent issues with her leg. And Obstinate's lawyer, kind of on the phone says, well, come on now, Georgia's bad faith laws. How are you going to prove bad faith? So here we get to the reason why certain companies like Obstinate Mutual make claims decisions like they did in Jane's case. So what happens next here in this scenario? So Jane now, she's got her judgment in hand, but she has to file, if she wants to pursue a bad faith claim, she has to pursue a separate bad faith claim under 33711J. And this trial won't include the same jury that heard her case in the first place. So it's an entirely new lawsuit. It's going to drag on for another 2 or more years. And this is the only remedy that the law is allowing Jane under Georgia law to try to hold Obstinate responsible for what she perceives to be bad faith and what, by all accounts probably is bad faith. So you may ask what happens next at trial. So the current bad faith statute says that if an insurer refuses to pay its insured a loss within 60 days after a demand's made and a jury finds the refusal was made in bad faith, the insurer shall be liable to the insured for not more than 25% of the recovery or $25,000, whichever is greater, and all reasonable attorney's fees. So long story short, Jane can file this lawsuit to attempt to have a jury award her $25,000 and for her attorney to possibly get paid the attorney's fees. The recovery here in the statute means the amount that would be paid under the policy, not the amount of the $300,000 award. So Jane has a decision to make. Is she going to file another 2-year lawsuit over $25,000? Why would she? Just so her attorney can get paid. So now for Obstinate to have to pay that $25,000 penalty, what would Jane have to prove to the jury? And this is the important part. In 23 states, the burden of proof for Jane would be that the insurer acted without a reasonable basis. Okay, just without, that's a negligent standard essentially. They acted without a reasonable basis. In 18 other states, the burden of proof would be the insurer acted without a reasonable basis and had actual knowledge or a reckless disregard of that fact. In Georgia, Jane would have to prove that Obstinate Mutual's decision to deny her demand for her $100,000 policy was frivolous and unfounded. Frivolous and unfounded. Georgia and New Mexico are the only 2 states that have that standard, and it's virtually impossible to prove. So the effect here is that there really is no bad faith for uninsured motorist insurance companies in Georgia. There's no teeth to the statute. So in some instances, it gets abused more often. Good insurers are going to handle the claim properly, but not all insurers out there are good insurers. And so Georgians are having to go to court to require their own insurance companies to pay what they owe with virtually no consequences to the insurance company when they drag things out. I'm going to try to speed this up a little bit because I know we've gone a little long today. So property damage, bad faith. Another common pattern I see in practice is a client comes into my office who's been in a wreck caused by another driver. Maybe they're an old client of mine from another case. They want me to help them with their property damage. I generally don't charge them anything to do this. So the client tells me the vehicle's totaled out and the at-fault driver's insurers refusing to pay reasonable fair market for the total loss. And I could probably name you on I could name on 5 fingers the insurers who do this, and it's probably not the ones that you know as household names. So we get the Kelley Blue Book website up, we get the NADA website up, we pull up cars.com, values based on the year, make, model, mileage, options. We go on Auto Trader, cars.com, pull the similar used vehicles being sold at retail around the Southeast. And based on that, we determine, we're like, yeah, they're lowballing you pretty bad, probably about $4,000 or $5,000. So what happens next? I establish communication with the adjuster, provide them with my data and the information that I have and try to negotiate a fair settlement value. 75 to 85%, maybe 90% of the cases, we get a resolution. They look at the data, whatever. But that other 10%, there are situations where insurers who are routinely failing to pay reasonable value in these situations. So what happens when the adjuster refuses to pay reasonable value? Well, in Georgia, there's only one way to attempt to put pressure on a third-party insurer and for them to do the right thing. OCGA 3347 allows us to make a 60-day time-limited demand for payment of what we believe to be a reasonable and fair amount for conclusion of the loss. And this is what the lawyers refer to as the third-party bad faith property damage statute. So a written demand sent by certified mail or overnight delivery offering to settle the claim for an amount certain. The insurance company has 60 days to respond to us, which is essentially 2 whole months to adjust the property damage claim. If they refuse to pay the amount demanded, the claimant can file a lawsuit, which requires a jury trial. And so once discovery and depositions are over, if the jury awards the client an amount equal to or more than the amount that we demanded, then that jury can then consider whether there was bad faith in that case. And so, you can get no more than 50% of the verdict for property damage, or 5,000, whichever is greater. So if it was, $20,000 in damage that they refused to pay for, you could get a $10,000 penalty, and then attorney's fees for the prosecution of the case. Now, I'd like to see a show of hands. You don't have to do this, but think it in your head of anybody in this room who would want to go through all that just to get your $4,000 property damage claim paid for. I don't think there are going to be many takers. So we end up in a system where certain insurers who want to exploit this process are systematically lowballing these values. And I'm seeing it where they're saying, well, in a clear rear end collision where your client was 20% responsible for it, so we're only paying 80% of the value of the vehicle. And for a lot of Georgians, that puts them in a bind. How are they going to, they can't get their vehicle, they can't get the total loss value of their vehicle. They may be a little upside down in the car based on that value. And we end up where there's an economic burden to a lot of people, mostly lower income people that are dealing with this. And so if nobody's really going to file suit and hold them accountable, why wouldn't they do this, right? I mean, why wouldn't you? So it just makes sense from a business standpoint to lowball as many folks as you can, because those cost savings add up for some of these insurers. One last thing I'll cover very quickly. There are some companies popping up in Georgia that are selling illegal, what I believe to be illegal auto insurance policies that can be turned on and off by using an app. Now think about that for a second. They refer to them as micropayment policies, pay-as-you-go policies. And in Georgia, the rule is automobile liability insurance coverage follows the vehicle. All right. And so if I entrust my vehicle to a friend or family member who is licensed, that insurance is valid. And so some companies are selling these policies under the guise of, and I'm assuming the way they're doing it is through what's called spot insurance, which is what you think of when you're dealing with a rental car, or if you didn't have your own liability coverage, you go in and get a rental car, you have to buy that damage waiver or spot insurance. And so one company in particular, which is called Hugo, is a product that's being underwritten by, and I'll name a name, First Acceptance Insurance Company. And they sell these policies by the day and allow drivers to turn the policy on and off via text, either via text or by the app. And so the problem we're seeing is that there are a lot of drivers out there, for whatever reason, who don't turn the insurance on that day. They go out and they cause a wreck. Then we get a denial letter saying there's no coverage here. And it's really interesting because what we keep seeing is that you see the time on the accident report, and about 3 to 5 minutes later is when Hugo says, well, they went and turned it on, but it was 3 to 5 minutes after the accident, because they either forgot or were taking a risk of driving around thinking, well, maybe I'm not going to 285 that day. I'm not going to turn it on. So Hugo is a tech company based out of California. They market on their website withhugo.com. And they say on their website, this type of coverage is currently available in Georgia. And it is, because we've seen it in practice. So this is, in my opinion, an unacceptable threat to innocent Georgians. And I sincerely ask the committee to work with the Insurance Commissioner's Office and Commissioner King and his staff to address that. And with that, sorry I've taken so much time. I thank you guys for having me, and I'll be happy to answer any questions.
Thank you, Josh. Any questions from the committee?
Yes, sir.
Leader Hugo.
Thank you. On this spot insurance, are you finding that associated with this app where you can rent your car to somebody for a few days or whatever? Is that connected with that?
What I think, and I've actually gone on a deep dive on the Reddit just to see how regular folks are talking about this. It's really prevalent in lower income communities. The idea is getting around through different communities that you don't actually buy the insurance on your car. You just go by Hugo. And so they won't get they're an uninsured driver. They're essentially driving around without car insurance on their vehicle, but they think, well, I have Hugo. And they don't realize that it attaches to like it follows the vehicle. So there's a way we can fix this and nip it in the bud. I mean, there's a way to do it, but we need to do it before it gets out of control because there's a lot of people. Yes, sir. Okay, great. Awesome. Yeah, I know you and I talked about it a couple months ago over a drink. And I've told everybody that I know that has dealt with this, make sure you make a complaint on the portal. But legislatively, there may be something we have to do. I don't know. And
The current law, says you have a 6-month policy.
right, right,
And on and off, not 6-month policy.
right, exactly.
Well,
We're fixing.
I'd like to invite from the commissioner's office as well as from the legal community and the insurance community, some good language about this, that we could consider. And also, key tam, whistleblower, class action, whatever you want to call it. If this is an opportunity to do that, to where you could have, attorneys get in there and get this thing under control in Georgia. If that's something y'all are interested in, because if it's illegal and you got companies out there doing illegal stuff and tricking customers into thinking they've got coverage when they don't, we need to put a stop to that.
I'm sure the fine print in Silicon Valley is very, very good, but.
Good night. Thank you, Mr. Chair. Mike, I have two questions.
Yes,
Number one, is there medical attached to Hugo? I'll bet not.
I think they sell, I think it has a liability.
It does.
Because they bill it as you can meet the state minimum liability limits if you purchase it based on the way they're advertising it on the website.
Okay, I'm shocked, but thank you. The bad faith statute, does that need to go away, or what's your recommendation there?
So I don't know what the solution is. I'm not coming in here with a specific solution. I do think that in situations where there's a purely uninsured defendant, it would just make more sense for the same jury to be deciding bad faith and, kind of like we do. And this part of the reason I mentioned the auto or the property damage statute is you go straight from there, from when the jury decides, then they learn about, and that's something I didn't mention, then they learn the insurer was the one making the decision, and you have the same jury making the decision on the bad faith, my focus in the uninsured motorist bad faith was on the standard, just that Georgia is one of the hardest standards to meet in the country, frivolous and unfounded, which is sort of, I think of it in federal law as like arbitrary and capricious. It's almost impossible to meet. And basically, if they had any reason to support that decision, the judge is probably not going to let you get it to a jury for the bad faith consideration. Thank you.
Thank you, Mr. Chairman. I'm going to tell you a little story also. About 150 in 15 years, I've dealt with cases like this. I'm not an attorney. I do it for free. It takes a lot of time dealing with the smaller cases I deal with. A couple of years ago, my brother is driving. He has a nice truck, but he doesn't drive that when he was going to work. Drives a little Ford Ranger, and it's in very good shape. Lady comes through the red light and T-bones him. 18 months earlier, he had shoulder surgery. 3 months from the wreck, he had the other shoulder surgery. So the T-bone tore up the 18-month. Well, he waits 15 days. Insurance companies stall, and he doesn't get a rental. Well, he has no truck to drive. He has his other one, but he feels like he should be covered. So finally, I get involved, and on the 15th day, he gets a rental truck. That evening, he's sitting at a red light, 93-year-old lady going 70 miles an hour, hits him at a red light. With that, tears his other shoulder up. Now he's had 2 accidents in 16 days, not his fault. So we get an attorney involved.
That's a nightmare.
Okay, so when we get this done, it's dragging and dragging because you have to negotiate. And with this whole process, we're looking at $100,000. So we finally, after about 4 months, we get the $100,000. They offer $800 from the start. We get it up to $100. And then the next one, they offer $800. We get it to $38,000. So he's made $138,000 on the accident. They offered him 1,200 on his vehicle. I had to show him all the records of what the vehicle was actually worth. And he received something close. But now he's had 3 back surgeries. He's had 2 shoulder replacements. And with that, his cost is around $187,000 in cost. And he's not the only one. I've had more and more that run into this. Now, I see the other side also, where the companies come through and do a very good job. I do see that. But then I have another friend of mine that his mother and father's driving down the road, and a guy comes across the center line, hits him head on. What happens is this young man dies and a 3-year-old child in the back. But they had 25,000, 50, 25. And with that, Progressive decided that they would give the girlfriend of the guy that got killed the 25,000. The lady on the other side and her husband, she had 4 surgeries and up to 400,000 in surgeries. These are the things that I see, and I'm not an attorney. However, when I see it, I kind of have to ask, how do we balance better protection for the person that is innocent? And now all of a sudden I'm looking at inflation we keep talking about. Why don't we look at, and some people aren't going to like this, raising 50, 75, 50. Why don't we raise our limits? And I know my roommate's going to disagree with that. That's fine, but why don't we look at raising limits to certain things? I have higher limits on my policy, plus $1 million plus on top of that. Why don't we make it, if we're going to make it mandatory, to raise the limits? And I just want to hear a good argument or definition on that.
Yeah, and that's a tough discussion to have because, that obviously affects the actuarial analysis of setting the rates. But I think there is some data out there, and we'll be happy to provide it to the committee that sort of shows that the cost of, for instance, the cost of fixing a vehicle now, the average cost is probably more than the 25,000 that's mandated under property damage insurance under liability in the state. I mean, I think the best thing we can all do is protect ourselves with our own coverages. I think that's what we do as responsible citizens. But yeah, that's a tough call. And I know there's really smart people. I saw one of them earlier in this room that can crunch those numbers for us, but it may be a conversation the committee needs to have. Sure.
Mr. Chairman, I live in Liberty, but not dirt poor, but rich. The only problem with that is most people could not afford the premium. And then what you'd have is even more uninsured drivers on the road, because I look at my insurance premium every time a State Farm commercial comes on, and I get upset. But if it gets any high, I don't think anybody, half of Georgia wouldn't be insured.
And I agree with that. But 2 judges I met with last week, Gainesville is the poultry capital of the world. We have a lot of people from other places that work there, and we're watching the numbers increase where they have no insurance whatsoever. And their increase is also having more and more accidents that the other people have no coverage basically except to go back to their own. So I'm just trying to throw that around. We keep talking about inflation, but we can't always look at a small group. We have to look at what's best for everybody, and that's including the small group.
I didn't say inflation. I said flat cost. You might need to talk to ICE.
Mr. Carroll, for 3 years, I've been looking for ways to give the statewide business court some more business. Is the 2-party consent rule, is that constitutional or statutory?
You're talking about the statewide business courts?
Yes.
That's statutory, I believe.
Okay.
No.
So, bad faith, this pay-as-you-go daily thing, any litigation about that? Rate review, which now goes to Fulton County, I think. Those are things that could be done by statute. Okay.
I think so.
Thank you.
Yep. Thank you for your time. Appreciate it.
Yes, sir. Kind of rough start.
Yeah, it is, isn't it?
I need to pay people.
Well, good afternoon. I think it's afternoon, or is it morning still? Still morning. Good morning, everyone. My name is Michael Walker, and I want to say, Mr. Chairman, thank you for the opportunity to allow me to come here to speak on healthcare and ICRA in particularly. When I was coming down and Hunter told me that we were meeting, because I'm used to going to the Capitol, he says, down in Macon at Farm Bureau, and I was like, Farm Bureau? So as I was coming, it reminded me of two farmers that were at a convention, and one was from Texas, and in Texas, everything is bigger, right? And the other guy was from Iowa. So they were talking, and the guy from Texas asked the farmer from Iowa, he said, how big is your farm? And he said, oh, I guess about 3,500 acres. He says, how big is yours? So the guy from Texas says, well, let's just put it this way. I can get in my truck at dawn, and by the time I get over my property and back, it's dusk. And the guy from Iowa looked at him and said, I understand, I had a truck like that one time. Thank you. I want to talk about ICRA, and primarily we're talking about healthcare. As you know, part of the most recent shutdown, a big part of it was healthcare or access to healthcare. We've been fighting and trying to figure out what to do with healthcare for quite some time. We had Obamacare, which is the Affordable Care Act, that came into being, and the part that Obama was trying to do was trying to get us to the point where we had more and more people in insurance. There's probably some good, some bad, and whatever, but I'd say one thing that was an issue with healthcare and the ACA is the fact that there were not enough incentives or penalties of non-performance if you did not take healthcare. In order for healthcare to work, it's just like our property and casualty insurance, and people, you just finished having a robust conversation regarding property and casualty and auto insurance, but it's the law that everybody has to have auto insurance. That kind of helps with the rate because you're spreading out the risk. With health insurance, it's the exact same thing. You have to have more people in the system in order to spread the risk out. But it's a little bit different because we need the younger, healthy people to be involved. And in healthcare, it's just the opposite. You have more of the advanced age people, and now we have the baby boomers coming of age. And so you have a lot more chronic diseases. Those are the people that use the system more than the younger people. And one of the things that was lacking, and I remember when ACA first came out, and they said that younger people would be fined like $800 or something like that a year if they did not sign up for health care. And the younger people would look at it and say, well, I'd just rather pay the $800 a year than to sign up for health care and have to pay $3,000 a year. And so you have to kind of balance that so that it'll be more of an incentive. And what I'm saying with that, that's just a little historical perspective to get us to where we are with the ICRA. And I will tell you that President Trump in 2019, he was the one that introduced ICRA. And for those of you that are not familiar with that term, what it stands for is Individual Coverage Health Reimbursement Account. That's what ICRA is. And so you've heard the president most recently probably talk about, I think I'll just give money to individuals and let them go out and buy their own insurance. Well, that's kind of dovetailing right into ICRA because it's about individuals going to buy their own health insurance is what it is. Also, it's interesting that in 2019, Governor Kemp started plans in order to implement Georgia Access.
And reason why I bring up Georgia Access, that's what this presentation is about, and we'll get to that a little bit in a minute. But what's going on right now is there are a lot of different entities that are coming together regarding ICHRA and individual health care. What's interesting is former President Biden, he maintained the status quo when he came into office. He realized that that plan by President Trump made sense. So he maintained that. Just recently, September the 18th, House Republicans passed what's called the Choice Arrangement Act. This is the renaming of ICHRA to Custom Health Option and Individual Care Expense. In addition to that, the Senate, the Senate has a bill that is going to mirror that and support that same language. And it's going to have the legal definition of a traditional group health plan with a 2-year tax credit of $100 per month per employee for small business. That's what's in the language. The interesting thing about that also is that the bill will direct the SBA to go out and do training, education, and what have you with small business owners about ICHRA. What they're trying to get to is that you have small business owners that are unable to retain talent, unable to maybe compete on a level with larger companies that can provide group benefits. Benefits is a big driver right now where we are. And that's one of the ways that you can entice a loyal payroll of people that stand there, employees that are staying there with you, is by having benefits. So now SBA is going to get in it. We're fortunate here in Georgia that former Senator Loeffler is now SBA administrator. I would encourage us to really kind of look at trying to see how we can move ICHRA forward in Georgia. ICHRA is already here. It's already in the market. But what we're looking to do, and what I would encourage you guys to do, is to look at maybe supporting the bill that will provide a tax incentive. And what we're looking at saying is that it's a 5-year limit. And it's $600 per employee per year for 3 years. That's not a lot of money, but what it does, it provides some support to an individual that's working at a small company that does not have any insurance to get them in the system. And again, this is only a 5-year program, but we're hoping that it will entice people by year 5, where more and more people are in the system and we're able to lower the costs. The other part of it is year 4, it drops down to $400, and then year 5 is down to $200, and then it sunsets. But what actually the goal here is to open it up. You know, I was saying to somebody that we're fortunate that healthcare is not a partisan issue. It's a bipartisan issue. You know, every time I've been to the doctor never looked at me and said, "What's your political persuasion?" What he said to me was, "What's your issue?" And his people out front says, "How are you going to finance that? Who's going to be responsible for the bill?" So what I'm saying is that we've got to work together and find some type of common denominator so that we can get everybody into the system, because it's going to benefit everyone. This is an issue that everyone has to work together on. Now, I know that there's some concern about maybe the plans that are offered. Well, here in Georgia, we're fortunate because of the planning by Governor Kemp to get Georgia Access going. We've been moving forward with this. And so with that, I start to go over some of this here to just show you. Now, what Georgia Access did, and this was just launched last week, and it is a program in which they're going to talk about the ICHRA and QSERA. And for those of you with individuals, small business groups to employ an ICRA or a QSERA.
PowerPoint, we work through that. Mr. Walker, while we're waiting for the PowerPoint, you're involved in NFIB, National Federation of Independent Business, correct?
That's correct. I am the current chair of the Leadership Council for NFIB, and we're supporting this bill. In addition to that, I'm the president-elect of the National Association of Benefits and Insurance Professionals, out of headquarters out of DC. And we're kind of tracking this legislation. This is how we found out about the SBA involvement in this, as well as the fact that Georgia Access is putting together a platform to try to make it easier. There are carriers here in Georgia that's already offering this. And basically what we're trying to do is look at healthcare is not a one size fit all. We're back on. Okay. Fantastic. I hope, can you guys see that? I know it's a little tough, but we'll go through this pretty quickly. What they are trying to do is the Commissioner of Insurance want to make available new options for small, medium, and large employers in Georgia. And currently, Georgia Access has the SHOP, which is for small business, but it has limited options. And we're looking at trying to just figure out a way to provide more options so that we can cover everybody. You know, health insurance is not a one size fit all. Everybody has a different lifestyle. Everybody have different needs and what have you. So we have to look for ways to kind of layer insurance to make it more affordable. Basically, what this is here is it's showing how Georgia Access can help employers choose their best option based on the real data. And the thing that what the ICRA will do, it will put a lot of the control back into the hands of the individual to get their insurance. Because if you think about the way group health insurance is, the owner or the sponsor, they pick the plan that they can do what they can most afford. And those are the plans that are being offered to their employees. Sometimes that just doesn't fit. So you have to look at another solution, another option to make it work. ICRA is a platform that will do that. The other question that I think some people ask is, are the plans have the same quality on the exchange versus off the exchange? To be on the exchange, it has to meet minimum essential coverage. So these are quality plans that have all been certified in order to be on the plan. And this is just utilizing technology to make sure that it's a seamless transition, which is what we're continuing to do. And it's going to support both the employees and the agents. With that, I'm going to go ahead and leave and close. I will ask you if you have any questions. Again, my apology for the technical difficulty, but that happens with technology.
Good thing is we will post this PowerPoint, so members of the committee and public see that. I think you're in open enrollment right now, right?
Yes, well, yes, it's okay. You have annual enrollment and open enrollment. Open enrollment primarily is for the benefits for group health insurance. Annual enrollment, it caters more to those that are 65 and older that are going into Medicare, or they're changing their Medicare plan. So they're both kind of going simultaneously. Annual enrollment began October 15th. It will end December 7th. And that's for Medicare. But come January 1, they have another open enrollment period that'll go until March, where people can change if they didn't get the right plan at that particular time that they started. And then as far as the group benefits side, open enrollment began in November the 15th.
And we had some speakers at our meeting in August about health savings accounts and flex spending accounts and how state government recently got involved in that. And that's something definitely for government as well as employers to know about for benefits. And I bet it's something that you make your customers aware of, right?
Oh, absolutely. We always looking for those types of flexible opportunities in order to finance access to healthcare. You know, and one other thing I'd just like to mention is the fact that, you know, with healthcare, there's an Emergency Healthcare Act that was signed back in the mid-80s by former President Ronald Reagan. And what that Healthcare Act basically said is that anyone that needs to be treated at an emergency room or have an incident that requires emergency health care has to be treated without it being refused if that hospital participate in any government programs, meaning if they accept funds from Medicare, Social Security. So who doesn't do that? Okay. And so when you hear stuff that, okay, this is about giving illegal aliens health care, that's not what it's about. It says anyone that's here in the US that needs emergency health care, but it's not about giving people long-term health care. It's taking care of that need. But that just tells you a little bit about the type of leadership that we've had before, and hats off to former President Reagan for getting that done.
Thank you. Looks, Chairman Lumsden has a question.
Did I understand that you were also NFIP?
I'm sorry?
Did I understand that you were an officer with or in the business world?
Yes.
Yeah. Well, in essence, doesn't this just provide folks in the small business world an opportunity to compete better for talent?
Yes, absolutely. It'll kind of level the playing field, if you will. Because when you have a company that is able to say that you have a company that has maybe 15 employees.
And
something like
Mr.
that.
Walker, if you can go back to Mike. That way.
Now it's pretty.
We,
Getting it to you.
believe it or not, there are some people watching live and then recordings, we're trying to capture it all. So
If you have a company that has maybe 15 employees and they are competing, say, on a government contract or any type of municipal contract, and then they're going up with a company that has maybe 50 or 100 employees, and the smaller company, they're losing their employees because at a smaller company, you know, you cross-train, you know how to do everything. That makes them a lot more valuable. So the larger company will come and pluck them away and say, hey, we have better benefit for you. What kind of benefits do you have? Well, we really don't have any. So it does that.
all right, thank you. Thank you, Chairman Lumsden, Representative Williams.
I'm trying to get some clarification, make sure I'm understanding you. And by the way, the Reagan era bill was a good bill and helped a lot of people. Only problem is now small rural hospitals are going broke because they're having to see everybody, and that's a real problem. So they carry a big load. I have a county, the development authority. We can't be covered under the county's health plan. Certainly can't be covered under the state health plan. So my development authority that I'm chairman of, we literally pay 12 to 13, each of our workers pay $1,200 to $1,300 a month in insurance premium. When all the dust settles, what's this gonna mean in the bottom line of what it's gonna cost with people for insurance? Because all the other stuff means nothing until you say, "I'm gonna give me some relief when it's time to write the check."
Well, it's going to be a slow process, to be honest with you.
That means no.
Yeah, what I'm going to say to you is that there are some things that are being done and implemented. For instance, President Trump has been talking about lowering healthcare drug costs. That's an issue that the association I represent, we've been talking about for years, because when you look at the US and other, like from a social economic standpoint, other countries that are on the same level, they pay 60% less in the cost of drugs than we do here in the US. Okay. Now the fact that he is starting to push them to negotiate that will start to bring it down. The other thing, to go back to healthcare, a lot of the cost in healthcare is on the provider side. There was a lot of misinformation out there that it was on the agent's side. They were out there making a lot of money. But when have you gone to the hospital and you've gotten your bill and you look and see that a bare aspirin costs you $100? or something like that. Another thing that's happening in the industry though, is that you have smaller physicians have a small practice where you can go in and get an MRI, and that MRI maybe costs you $300, $400, something like that, but it's reasonable. Well, then in a few months, because of venture capitalists coming in and getting into healthcare, purchasing up businesses and larger hospital systems that they have, they come and buy out that small physician, and now he works with them, and you go right back. And as soon as that merger happened, that procedure that cost you $400 has tripled. So there's got to be some give and take here and there. And I get you. A lot of hospitals in the rural areas, they have gone out of business because they are forced to treat people that are uninsured, but they're not getting the support on the back end. And then you have hospitals in different areas. Like for instance, I saw a study where a person that was getting a knee replacement done in New Jersey, and it was going to cost him somewhere in the neighborhood of $20,000, $30,000. And then there was a company down in San Antonio that was going to do it for half the price. So we're going through a change like that, and we have to get to a point where everything becomes stabilized, and transparency is a big thing in healthcare. Because think about it. Healthcare is the only industry that you go in to see somebody that you don't know what it's going to cost up front. But if you go to talk to anybody else in any other business, the first thing you guys do, you talk about what it's going to cost. And it's full disclosure. You don't know until you get surprise billing, right? So we've got to do something like that from a legislative standpoint to kind of fix that. So I guess what I'm trying to say, guys, it's not a quick fix solution, but it's going to be one that has multifaceted types of tools involved. And ICRA is just one of them that we're trying to
I'll
support.
be watching very closely, because the bottom line gets down to what's going to be the cost to get help. And the $100 aspirin ain't the problem. It's the $20,000 2-day hospital stay.
Absolutely.
I could pay the drugs, but it's awful. And no matter what we come up with, how much is my coverage going to cost me, and how much will it cover? That is the question small business and consumers want to know.
Absolutely. I agree 100%.
All right. Any more questions for Mr. Walker?
I have one,
all
Mr.
right.
Chairman.
Leave you.
Oh, thank you so much. We're talking small businesses, but that could be a wide range. Tell me what you have in mind when you say small businesses, and what percentage of those businesses would have to enter this marketplace in order for this to work?
Well, your second question, I don't have the analytics for that. So I'm not going to say I would, if I had to make a guess, I would say from a standpoint of making something work like this, we really need probably 70%, I would say, because you got to make up for the time that's lost. And it takes the time for the market to catch up. You know, you can't just flip the switch and have it. It's going to be a gradual thing, but I would say 70% if I had to guess. Now, what was the first part of your question again?
The small business, what is your definition of small business that you're operating under for this?
Okay. There are a couple definitions of small business.
Yeah.
First, I think the SBA definition of small business is maybe 100 employees or less. It's a little bit higher. But a lot of times out in the private sector, they're talking 50 or less. And then when you look at a lot of your health programs, like for instance, like the QSERA, the one I was talking about, if you go through that slide, it'll talk about employees with 50 or less. The ICRA is usually 20 or less. But the definition of small business, sometimes you look at it because the SBA, they put out like their federal acquisition regulations and they define what a small business is. Sometimes they look at revenue to determine if you're a small business, making $1 million or less, you know, or 10 to 15, like that. Another question? No?
Yeah, yes, yes, sir.
And you've got all the time you want on this.
Okay. Well, this is near and dear to my heart because this is what I do for a living. When we were talking about the drugs, for instance, I had someone call me yesterday. I've got a group of like 100 employees, and they had a new employee, and his wife was taking some biological, and it was going to cost $40,000 a script for that biological. Well, number one, if you could somehow get it on a self-funded plan and figure out how to have that plan through the drugs when you're talking about either through a FQHC, you can get those specialty medications through the 340B program. You know, that's something that we have the largest FQHCs east of Texas, federally qualified healthcare centers. You can go get a specialty medication that might be costing 40 grand. And if you can get it through your hospital pharmacy, you're looking at about a 10 grand, a tremendous swing. You're talking about a lot of employers have gotten where they're resourcing their drugs through Canada.
Yes.
Okay. Well, they don't have to go through the FDA process like in the United States. That's why our drugs are so much higher. Once Canada becomes a 51st state, I'm joking. I'm joking. But there's a lot of costs going on right now with drugs that are so high that we have no idea. I had a lady 10 years ago taking a drug for Cushing's disease, Korlym. That prescription was 40 grand a month. That would have broken the healthcare plan.
Yes.
There's no answer for that. We were able to get it through 340B pricing in that $10,000 drug, which really helped the plan at that time. The Canadian drug source. Okay. Something else we're dealing with, you're talking about the ICRAs. Well, if you have a group of 18-year-old to 30-year-old males, you know, you can do a group level funded plan, and man, you can make that plan work all day long. And ICRA, that would be fine as well. But if you throw in some 50-year-olds like me, 60-year-olds, and you're having different plans in that with Blue Cross or maybe with Cigna or maybe with Alliant or whomever is in that individual market, you're having folks with different networks with different deductions, and then you got to make sure it's affordable. There was a plan that was brought to our committee last year that they wanted above 50 employees. And my question was, well, if you're going to do a $600 tax credit, the employer still has to make this affordable, i.e. 9.04% of the person's gross income, so that passes Part A and Part B penalty that the federal government imposes on employers of 50 and above. That's why it's different on small employers and large employers. Some states say 100, some states say 50. You know, like that was,
Yes,
the question that
Yeah.
Leader Hughley was asking. So there's not, like you said, there is not an answer. These ICRAs might be good for some of the small groups that are not offering anything.
Exactly.
But if you have a group plan in place, we can't punish our employers that are doing the right thing right now. They're not getting $200, $600 tax credits for offering their plans right now. So my question, if we're going to be fair, how are we going to offer these people incentives for these ICRAs, and we're going to throw away the folks that have been doing it right the whole time by providing health care for their employees? So we got to be careful how we do this. And I don't think it's just a pound your fist thing. This is what we're going to do, but I think it's incremental and we got to have steps. But, maybe we start with 10 and under, 10 employees and under, and look to see. And if we can get some carriers that will be willing to do this. But something else you have to remember, some of these locations in the great state of Georgia, you might be in South Georgia and want to go to Florida. You're not going to have coverage with some of these individual groups that you would with a group plan, like a Blue Cross. They might not cover Mayo on these individuals, but if you're on a association plan or a group health plan, it's going to cover that.
Well, these plans are supposed to be PPOs, which are provider network. You know what those are. So you can go to, you're not restricted to just one network.
But that is something to remember, though,
Yeah.
when you're
Oh,
looking
yeah.
at that on these individual policies. One other thing, and I'll close, I'll hush because I know we have a lot more, and I'm not trying to steal your thunder. You're talking about our rural hospitals, why we're losing money. We have so many people now that are Medicaid or Medicare Advantage plans. These Medicare Advantage plans are killing our hospitals. Yeah, exactly. They do not pay.
Well, the Medicare Advantage plan is a plan where, and it depends on which one you're in too, okay? Because they got the HMO, they got the PPO, they got the point of service and all of this type of plan. And some of them, they have where you're restricted or you got to get step therapy and all of that. from an ease of use, a Medicare supplement plan is the best out
Oh, yeah,
there.
Plan G.
Yes, the Plan G, that's the best out there. I'm sorry? Well,
Plan F and then.
Plan F,
Plan
they
G.
sunset Plan F because it was so good that people got on it and they were just, it paid for everything. And so they had to come with Plan G to kind of balance out the costs. So that's the new one. But not everybody can afford a Plan G. And so then that's where the Medicare Advantage come in, basically. That's it. Anybody else have another question? Appreciate your comments, Noel.
Yes, sir. Thank you.
We can talk about that, but I agree with you on ICHRA. It's more suited. Everything has a sweet spot.
Right.
So it's more suited for, 4, 5, 6, somewhere like that. Yes, absolutely. Agree.
Thanks so much, Mr. Walker.
Thank
All
you.
right, I know a lot of folks are asking, what are we gonna do about lunch? We are gonna take a lunch break before we get to the premium tax. So, we got several people here to present on the premium tax. I appreciate that. We'll do that after a lunch break. We've got some folks here from, Collision Repair, Jason Babb, Chuck Akers, Michelle Combs. Y'all come on up. Anybody else, with the Collision Repair folks, come on up. And I know y'all have some materials for the committee too, so appreciate y'all. All right. And while y'all are coming up here, Judy Holt from Swanee weighed in as well. And I think it's consistent with what y'all are going to present. So, all right. Thank you.
Thank you for having us this morning. I'm Chuck Akers. I have an auto body collision shop in Northeast Georgia. This is Jason Babb and some of our partners here. Wow, this morning I am blown away at some of the complexities of what you guys are dealing with. And I think in some ways it's way more complex than what I want to present and what I'm dealing with. When we were in Savannah, we talked about some of the complexities of today's vehicles and the need to repair those vehicles safely so that Georgia consumers, Georgia drivers go back on the road safe. The manufacturers have done everything that they can to make these vehicles as safe as possible. It is preventing accidents, and it's actually lowering fatalities and major injuries. With that said, I want to share something that came from the insurance company to a body shop in Georgia a couple of years ago. This body shop was looking at their exposure with calibrations, ADAS calibrations, and they wanted to make sure that they were covered in this. And so they went to their insurance agent to explore this opportunity or this lack of coverage and make sure that everything was going to be good. So the insurance agent began to look at their policy and went to their policy holder, because do remember this, even though we're dealing with insurance companies all the time to be able to repair the vehicle and we're dependent on them to pay for that, we're also exposed. We have to pay workers' comp insurance. We pay garage keepers insurances. We pay umbrella insurance and all of these things. So we want to make sure that we're covered too. This insurance company, I feel like, did a great job of saying everything that we want to say about what we need to do and that exposure. And I'm going to read this letter, but I'm going to leave the names out of it because I want to protect the agent specifically in this that forwarded this on. It says, I'm sorry, and this is the response to the agent. It says, I'm sorry I didn't get back with you yesterday. I don't have good news for this one. We are not in the market for calibration services. Here's information on why we're not in the market. Vehicle calibrations have to be done right, especially when it comes to advanced driver assist systems, calibrations, or ADAS. This refers to the fine-tuning of many safety systems throughout a vehicle that aid in various processes from airbag deployment to lane change assistance to emergency braking. Calibration of a vehicle after a collision is necessary regardless of how severe the collision was. Getting vehicles calibrated correctly can literally mean the difference between life and death for occupants of a vehicle. If not calibrated correctly, vehicles can haywire and people get hurt or worse. Here's a sample of systems that require calibration after collision: adaptive cruise control, blind spot detection, collision avoidance systems, automatic braking, lane departure warning, traffic sign recognition, rain sensors, tire pressure monitor, night detection, driver drowsiness detection, hill descent control, steering angle, parking assistance, pedestrian detection, forward collision warning, intelligent speed adaptation, automatic navigation, electric vehicle warning sounds, and surround view systems. While it is great that the insured wants to create an entity for the vehicle calibration exposure, we are not interested in insuring the exposure. We cannot add the entity as named or additional insured to the existing policy. We would not want to write a separate policy for this since it is considered a new venture entity with primary vehicle calibration operating, have no prior experience. With high states of life and death surrounding a fairly complicated and relatively new service, this new entity would be placed as an E&S carrier, specialty carrier basically, and recommended to a different insurance company. The bad news is it sounds like the calibration work would be performed anyway and using this employee at the shop. Vehicle calibrations requires dedicated space for operation that is often required as part of the calibration business. Calibration requires the space free of unexpected sources of interference that sensors could detect and throw off the calibration. This would present a shared premises and shared employee exposure. It goes on to say, I would not be willing to allow this insurance policy. So basically what I'm reading here is where the insurance responded and said, we recognize everything that the auto body collision center is saying. We need to repair cars safely and recalibrate cars safely so that that driver goes back on the road with the same safety systems that they had the day before that they had the accident. We recognize that that needs to be done. We really don't like the exposure of it. We want to protect ourselves. And so we're not going to do it. And I can respect that. That is a large exposure. Those things do definitely have to be done right. And whether you like it or not, if you're in the collision business, if you have a mechanic shop or a collision shop, either one, you're involved in these systems. They come through your business. You have to calibrate that. You're responsible for that. But what is funny to me, and what is interesting, is the very same company that insures this business also insures motorists. And while out of this side of this company, they acknowledge that these things have to be done correctly, they have a number of times on the claim side said, we don't pay for that. One specific example of that would be seatbelt inspections after a crash. Another one would be airbag detection systems after a crash. In some other cases, ADAS calibration in regards to lane control. And they said, we don't pay for that. And what we're asking for is the fairness in acknowledging that these systems have to be calibrated correctly. And please reimburse the customer for that calibration to be done, because it's all about saving Georgia lives at the end. I'm going to pass this on to Jason Babb. Thank you.
All right, thank you for the opportunity to be here. My name is Jason Babb. I have Babb's Body Shop in Chatsworth, Georgia. If you don't know where that's at, it's the last stop before you get to Tennessee. So it's quite a ways up there. We got to speak in Savannah, and we appreciate that. And I'm going to try to be as brief as possible because I know everybody's hungry and I want to be respectful of your time. Real quick, what we talked about in Savannah was a lot of the stuff Chuck just talked about. We talked about safety and OEM repair procedures and how today's cars are pretty much rolling computers, and everything that we touch requires a calibration, or the manufacturers have procedures how we repair every vehicle to put it back on the road safely. The second thing we talked about is how the insurers often refuse to pay for those procedures. So a lot of collision centers in Georgia now are routinely told by insurers that they will not pay for certain OEM required procedures, even when we have a document in black and white saying that from the manufacturer that says it has to be done. And the third thing we talked about was the delay on supplemental repairs. So when we get the car in the shop, if we find additional damage, we're waiting days, sometimes weeks, to have an approval to move forward. It's not good for the consumer. It's not good for us. It takes up our floor space, and quite honestly, it's not good for the whole community, because that could be a doctor, a teacher, or whatever that can't get back to their normal life. So while we were in Savannah, you asked us to bring examples of what other states have done to address this stuff, and that's exactly what is on the flash drive that you guys received. I put it on a lanyard so it would be harder for you to lose. And, and this is new to me because I'm not very technology advanced, I guess, but you just flip that little thing right there out and that plugs into your USB drive if you haven't saw one of those before. So on this flash drive, part one is to do with the timely supplement review. You'll see on that, in that folder, there are summaries and statutory references from number one, Rhode Island, where appraisers must reinspect for supplement damage within 4 business days of the shop's request. From Massachusetts, where an appraiser must inspect a requested supplement within 3 business days. And from New York, where a second inspection for hidden damage is required within 2 days. There is also, if you don't want to read through all those summaries, there is a summary of all 3 laws in there. And then there is a draft Georgia bill, what we would like to see in Georgia. For lack of a better term, we named it the Georgia Motor Vehicle Claims Timely Supplement Review Act. The model bill would require insurers to approve or deny a supplement within 72 business hours and require a written explanation of anything that they deny so that everyone understands what was paid, what wasn't paid, and why. The second part on the flash drive is to do with OEM repair procedures and safety. Here you'll see the actual law from Rhode Island and a summary of the law that requires insurers to reimburse collision repairs for documented OEM repair procedures when they're necessary to return the vehicle to pre-accident condition. And you will also see a drafted Georgia bill there as well. We named this Georgia bill the Georgia OEM Repair Procedures Act. This would just make it clear that when a shop follows vehicle manufacturer's written procedures to safely restore a car after a collision, the insurer cannot refuse to recognize those procedures just because they cost less. It would protect consumers by ensuring that required safety inspections, scans, and calibrations are treated as standard, reimbursable parts of a repair, not optional add-ons to be argued over claim by claim. And it would keep all Georgia shops on a level playing field so the shops that are doing the right thing aren't punished when compared to those who are cutting corners. Again, the goal is not to expand coverage of a policy in any way. It's to make sure that when a covered loss happens, the vehicle is repaired safely and correctly according to the people who built it. There is also a document on there that has all the contact information of all the legislative members of the GCIA. And there's a card in there with a QR code with my information. And we would welcome anybody to reach out to us and talk about it.
Gentlemen, thanks so much for coming. Michelle Combs, thanks for coming from my area. Judy Holt is with Georgia Paint and Body on Beaufort Highway in Swanee. She sent something very consistent with what y'all are saying. Representative Williams.
Thank you. Thank you. I heard you in Savannah.
Yes,
Kind of opened up, just not paying a lot of attention. My mindset was still in the days of the old Bondo, the grinder, and you could get back on the road. And it never occurred that all these pretty pictures you see are part of the program. And I'm glad you shared with the chairman some model legislation, because without this hearing, I would not have known that that's a problem. I just took for granted when you drive in there, they're going to give it back to me like I fit in.
Every year when new cars come out and they have all these new features and everybody talks about how great they are, what they don't think about is what happens when you have an accident.
Yeah.
All those features have to be.
I appreciate what you said. I can't guarantee that on my way to Tennessee, I'll drop in, but
Anytime.
I can't think of many reasons, but thank you.
It's on a pig trail out there.
Oh,
Thank y'all so much. All right, we've got one more speaker before lunch, and that is Mr. Clarence Cox of Georgia Motor Coaches Association.
No.
Last before lunch, but definitely not least, thank you for coming from Hampton, Georgia. Tell us about your association.
You never put a Baptist up right before lunch.
Better go eat then.
Mr. Chairman, Honorable Committee, thank you for having me this morning. Again, my name is Clarence Cox. I'm a CEO of Georgia Coach Lines. We're located in Fayetteville, Georgia, and I'm a proud member of Georgia private bus and motor coach industry. I'm the past president of the Georgia Motor Coach Operators Association and a current board member and legislative and regulatory affairs chair. I serve on the board of directors for the United Motor Coach Association, and I chair the African American Motor Coach Council for the American Bus Association. I'm here today to speak on behalf of thousands of small businesses like mine that serve as a backbone of group ground transportation and tourism across our state. Let me begin with a simple but powerful fact. 90% of bus and motor coach companies in the United States are classified as small businesses by the U.S. Small Business Administration. Since deregulation federally in 1982, and since at the state level in 1998, the industry has been a success story for minority and women-owned enterprises, especially here in Georgia. My company has been successful in that we provided the transportation for those who mourn the death of Georgia's favorite native son, Jimmy Carter. And we've been proud to be participants in several major large events. We've grown through private, unsubsidized capital investment. We've created jobs, we've connected communities, and we've become a vital part of Georgia's tourism industry. And I did leave with the chairman a copy of the impact study for Georgia's economic impact from our industry. But today we face a serious threat. Liability and physical damage insurance premiums have skyrocketed, doubling, tripling, and even quadrupling in a few short years. And while Georgia has taken steps toward tort reform, more action is urgently needed. Let me be clear, we fully support the rights of legitimate plaintiffs to be made financially whole, but too often these claims are reasonable lottery payoffs for more than fair compensation. The burden of this legal system is no longer just a headline, it's washing up on the shores of every household and threatening the future of Georgia's small business. If I can share a short scenario, on motor coaches, many of us in the business have gone to the extreme things of adding cameras inside of motor coaches as well as outside because of the frivolous lawsuits that we have had to endure. Have an operator in our association who went through a lawsuit at a casino where a young lady slipped and fell. Well, she said she slipped and fell, and come to find out the lady wasn't even on the bus. She heard about the bus going to the casino, and for us, we don't keep manifests of each and every passenger unless it's a school trip. And these guys had to fight this lawsuit in court for over 5 years, and ended up the insurance company just paid because it just kept getting worse and worse. Couldn't find any witnesses to say that this lady was on the bus or anything. No chicken boxes left with her prints on it or anything. So we knew that it was a frivolous lawsuit, but we just couldn't prove it. Our industry is already tightly regulated. We carry a minimum of $5 million in liability insurance for each interstate's travel. And the cost of the new motor coach is exceeding over $600,000. Lenders require full value coverage. These are not optional expenses, they are mandatory, and they're crushing us. Despite the challenges of our industry, we continue to deliver essential services to our community. If you remember back in COVID and the airlines had slowed down, Megabus, one of our members, continued to drive that bus, sometimes with 1 and 2 passengers, a 56-passenger motor coach throughout our state and others to try to provide transportation. Each time there's a shutdown, motor coaches respond to those folks that can't go out to Hartsfield Jackson or any of the other airports to purchase a ticket. Each weekend, we are at HBCUs and high school football games, providing transportation for our college students. We move soldiers from Fort Benning on a regular basis, Fort Jackson and others, to service our military. We support churches. You know, preacher got to go somewhere and preach on Sunday. He needs to take congregation. We take them. Yes, sir. And as you know, we host a lot of major events, including conventions here in Georgia. We're transporting our visitors throughout the city of Atlanta and other venues that host those large conventions. In 2024 alone, Motor Coach Group Travel in Georgia recorded 226 million passenger miles and generated 568 million in direct spending. That spending rippled through the economy, creating a total impact of $1.4 billion, supporting over 8,800 jobs and generating $211 million in tax revenue, which brings up another thing. We have many coach operators that come to our state and provide this same type transportation without being permitted, without being regulated, and they leave our state with those revenues and not paying taxes, and that's another thing we're working on. But the rising insurance costs are forcing operators to make difficult decisions, cutting coverage and raising deductibles, dropping essential practices like cyber and the management liability, passing costs on to employees through higher health insurance premiums, and struggling to compete with larger companies that use offshore insurance captives to avoid taxes and risk assessments. These pressures don't just threaten our business, they threaten the ability to grow, hire, and to serve the great citizens of Georgia. So today I respectfully urge you in this body to take action, throttle excessive insurance premium increases through oversight and reform, advance meaningful tort reform that protects legitimate claims while curbing abuse, ensure insurance equity and for small business so that we can compete fairly, protect the capital investment and services that Georgia tourism economy depends on. Georgia's bus and motor coach industry is more than a mode of transportation. We are a lifeline of communities, a driver of economic growth, and a model for inclusive inclusive jobs. We're asking for the support, not for subsidies, but for fairness, and help us to preserve the vital industry so that we can continue to serve Georgia. Thank you for your time. Are there any questions?
Mr. Cox, thanks for that thorough presentation. Any questions for Mr. Cox? Definitely any specifics on those you've got, send it our way. We'd be glad to circulate that with the committee, but appreciate you coming today.
Let him lead next
Thank you.
time. But right now, I'm home.
All right. It is almost 12:30, so why don't we recess until 1:30? We've got a couple of other speakers and then premium tax after lunch. So let's come back at 1:30. Committee members, check in with me real quick. Get started back. All right. What we're going to do, we've got a couple of witnesses on Zoom who we'll hear from, and then we'll dive into the premium tax for the remainder of the meeting. So we'll go ahead and reconvene. One thing I wanted to point out, Georgia Dental Association presented a letter, members, and we'll get it posted out online, but they brought up commercial property insurance, commercial auto, dental practice expenses, homeowners insurance, increases in rates and premiums. It does have an impact on small business dental service of patients. So just wanted to make everybody aware of that, and we'll get that posted out and appreciate them passing that along. All right, we'll go ahead and hear from one of our folks on Zoom. Appreciate them waiting patiently. Roland Bain from Georgia Mental Health Policy Partnership.
Yes, sir. And let me make sure I've got this up and going in the share.
Roland, either your mute or your volume's down. While we get that straightened out, I wanted to reiterate how encouraging it was to hear of a rate decrease this week, but definitely welcome insurers. Let me or other committee members know between now and December 18th, and we will publicize your rate decreases just like State Farm got publicized by the commissioner this week. So we welcome further rate decreases between now and our next meeting. All right, Roland Bain.
Thank you, Mr. Chairman. Can you hear me? Hello? Mr. Chairman, can you hear me?
Roland, good news. It looks like we've gotten a paper copy
Chairman, can
of
you
your
hear me?
PowerPoint. So if you want to go ahead and start speaking, we'll catch up with you on the electronic PowerPoint. Roland, we'll give you a little while longer to see if you're connected. If not, we'll go on to our next speaker on Zoom and circle back to you. So last call for Roland Bain.
Yes, sir. Can you hear me?
We can hear you now.
Thank you. Appreciate it. Sorry for the challenge there. And also just want to confirm that the slides are visible, or the slide.
See ya. Thanks.
Terrific. So good afternoon, Mr. Chairman and members of the committee. My name is Roland Bain, and I am the one of the co-founders of the Georgia Mental Health Policy Partnership, and have previously served as chair of the Georgia chapter of the American Foundation for Suicide Prevention. I had the good fortune in 2021 and 2022 of working with the sponsors of the Georgia Mental Health Parity Act, the late Speaker Ralston, and also Chairman Todd Jones. I think that it still stands as a remarkable bipartisan achievement, and want to make sure that we can continue building on the work that was done there. The data on this slide are haunting reminders of why that work matters, and why your work today matters every bit as much. They show how much remains to be done to ensure that all Georgians, especially our children and young adults, receive timely, medically necessary mental health care. And they remind us that parity, enforcement, and accountability are not abstractions, but rather they are life and death obligations. When we talk about insurance rates, whether premiums in the commercial market or capitation payments in Medicaid, we have to start with the basic principle that rates matter only if payers are delivering the care that the law requires. So raising or adjusting rates without examining performance simply pours more money into a system that may not be producing real access. Accountability is what turns funding into care. It ensures that premiums and capitation payments purchase medically necessary services, not just administrative activity or paper compliance. When enforcement is weak, families pay for coverage, but still can't get appointments, and providers leave networks that no longer support sustainable care. At the end of the day, Georgia's taxpayers and children deserve the full value of every dollar spent. Enforcing parity is how we guarantee that value, by making sure that rate dollars translate into real, timely, and medically necessary care. Families believe they have health insurance. Taxpayers believe they're funding care. But what Georgia purchases and what Georgia receives are not the same. The mismatch between premium dollars and delivered services is stark, and it lands hardest on children with the most urgent needs. Insurers and MCOs openly state in their regulatory filings that they use their own narrower definitions of medically necessary. But under Georgia law and under federal parity standards, Georgia's statutory definition governs. This is the line between what must be covered and what can be denied. And right now, that line is being drawn by the payers, not by the law. It's as if the state set the speed limit at 65 miles per hour and insurers simply decided theirs was 85. Without enforcement, they're free to drive as fast as they want, and Georgia families and taxpayers bear the consequences. This chart shows widespread material violations of the Georgia Mental Health Parity Act by all four companies on the slide: Amerigroup, CareSource, Peach State Health Plan, and United Health. The first three, as you all know, are Georgia's current Medicaid MCOs. United Health is tentatively slated to become one of the new MCOs at the conclusion of the MCO contract award tender process. Down the left column, you see 5 core provisions of the Parity Act, including the requirement that utilization tools be independent, evidence-based, and recognized by practicing clinicians. These are the very provisions that the 4 companies and their lobbyists tried to change or delete while HB 1013 moved through the House and Senate. In fact, the word independent was the last protection inserted just before final passage of the bill by the Senate. The pattern in this chart is simple. The same entities that fought to weaken the law during its drafting are now failing to comply with its practices. On this slide, you can see how utilization management functions in Georgia and elsewhere. On the left is the clinical recommendation, what the treating clinician says a child needs. That proceeds into the UM, or utilization management tool barrier. And from there, only a narrow stream makes it through to approved care. Most of it is diverted downward into denied, delayed, or cut short care. Under the Georgia Mental Health Parity Act, utilization management tools like Interqual and MCG Health are supposed to meet these 3 tests. As I said, they must be evidence-based, recognized by practicing clinicians, and independent. So decisions follow clinical judgment, not a cost-cutting algorithm. Yet, in multiple filings with DCH and OCI, insurers and Medicaid MCOs openly admit they are using third-party tools that don't meet any of the 3 requirements. That means the barrier in the middle of the graph is not just unfair, it's flatly illegal under Georgia law. As mentioned previously, enforcing parity is like enforcing speed limits. The challenge has been that parity has few troopers and, at least to date, no radar guns to detect violations. CHOA, however, Children's Healthcare of Atlanta, has built the first operational radar gun for parity enforcement. It uses electronic health record, or EHR, data to detect in near real time when a child or adolescent's recommended treatment is delayed, denied, or never scheduled due to insurance barriers. This is the first tool that can show case by case and by each payer whether parity is being met. This is the future of parity enforcement. CHOA's parity tool shows that Georgia's problem is structural, not incidental. In-network providers deliver only 40% of medically necessary mental health care. So most children's families must go outside of their plan's network to receive the treatment clinicians recommend. And that is if their families have the financial resources to do so. For many Georgians and Georgian families, they lack those financial resources. And as a consequence, their family members must go without medically necessary care. The financial pattern is just as stark if you look at the bottom 2 bars. 1 in 5 families, or 20%, pay out of pocket for children's mental health care, compared with 3% for physical health care. And only 35% of mental health care is reimbursed by payers, versus more than 90% for physical health services. When 2/3 of mental health treatment goes unpaid, parity becomes impossible in practice, and children and young adults face the consequences. The data is relatively unambiguous. 34% of Medicaid insured children's need for counseling and therapy is unmet, according to a study by UGA researchers that was published this January. Behavioral health providers are paid roughly 51% less than comparable medical surgical providers for similar visits. This according to a study that was published in 2024. And for 6 months in 2024, none of the Georgia Medicaid MCOs had a single outpatient dialectical behavior therapy provider in network for children discharged from CHOA ERs. The reason this is important is that dialectical behavior therapy, or DBT, is one of the few gold standard interventions that we have that have proven effective in addressing suicidality and self-harming behavior. It's not something that was just recently developed. In fact, more than 30 years ago, there was the first randomized controlled trial that demonstrated DBT's effectiveness. So not having access to any of those therapists, because none are in network, or if they're in network, they're not taking new patients, is sort of the equivalent of someone who went into the ER for a heart attack and upon discharge found that his insurer's network did not have any cardiologists. Finally, enforcing parity is a fiduciary obligation to Georgia's taxpayers. Roughly 2/3 of the state's Medicaid funding comes from the federal government. And when parity requirements are violated, the feds may recoup its share from Georgia, not from the MCOs. Active enforcement protects those federal dollars and gives the state leverage to claw back overpayments and damages from non-compliant plans. Without it, Georgia risks paying twice. Once for capitation, and again, when federal auditors come calling. Since the Parity Act took effect on July 1st, 2022, the federal government has contributed more than $12 billion to capitation payments to Georgia's MCOs, a figure that grows by over $350 million each month. The state budget does not account for contingent liabilities on that scale, which makes rigorous parity enforcement not optional, but financially essential. And I'll actually stop there. Don't want to take up too much more of your time, but quite willing to answer any questions that you may have.
Thank you, Mr. Boehm. I appreciate that detailed presentation. One thing that your talk reminded me of is fines. I know that mental health parity violations and fines have occurred. And one thing we heard in our first meeting is that the fine schedule and a lot of the insurance statutes hadn't been updated in quite some time. With Legislative Counsel Sarah Crittenden's help, I've gotten the 40 or 50 insurance statute fines, and I'll circulate that to the committee for the committee to look at. I know the insurance department is looking at that fine schedule, and would love for the committee to look over some of those and see if those thresholds there need some attention. And if you have any light to shed on fines for the mental health parity issues the last few years, you're welcome to add to that.
Yes, sir, and thank you. As we've heard, I guess about 2-3 months ago, the Office of Insurance Commissioner announced that it will be imposing fines for parity violations against, I believe it was 22 ACA health insurers that participate in Georgia's marketplace. I'd like to point out that those fines are not for the failure by any of those insurers to comply with their parity obligations, but rather those fines are for the failures by those insurers to submit the data that the Mental Health Parity Act requires them to submit on an annual basis. And while fines are a part of the solution, Georgia has a whole toolbox of remedies that is potentially available to them for violations of parity. And those include fines, as we mentioned, but those also include things like stopping enrollment, automatic enrollment in MCOs that are currently violating statute. It also means that you can put a hold on payments out to the insurers or Medicaid managed care organizations who are not compliant until they have completed a corrective action plan. And sort of in the worst case for everyone is that they can terminate the contracts. I just want to liken it to, imagine if you're Home Depot, right? You've got a supplier, you've got specs that the goods the supplier is to provide to your stores must comply with. And then what you find out is on its delivery that there are massive non-compliance with the specs. In that situation, I think we could follow Home Depot's process and say, first, we're going to reject what was offered, then we're going to recover or refund any payments that might have been made until that time. And then if we can't fix it, then we need to resource the entity that is providing the services for Georgia's families and children. Thank you.
Thank you so much. All right. Really appreciate your testimony. Next speaker, Mr. Bob Passmore with American Property Casualty Insurance Association.
Good afternoon, folks. Let me get my slides up here. Okay. Can you see the slides?
Yes.
Do you see just the slides or do you see my notes?
Just the slide.
Okay, good. Well, good afternoon, Mr. Chairman and the members of the committee. I'm Bob Passmore, Department Vice President, Personal Lines with the American Property Casualty Insurance Association, better known as APCIA. APCIA, if you're not familiar with us, advocates for competitive insurance markets for the benefit of consumers and insurers. Together, our members write just over 60% of the auto insurance in Georgia. So I'd like to thank you for the opportunity to talk to you today about auto insurance cost drivers. What I hope to do is provide some perspective about what has been and what's continuing to drive auto insurance costs now and in the future. We heard some good news this morning about auto rate decreases in Georgia, and the tort reforms implemented in Georgia are very promising indeed, but I plan to focus on other cost drivers than litigation today. I think it's important to start to correct some misconceptions, and it's easy to conflate the profitability of different segments of the insurance industry. This chart shows that life insurance, represented by the yellow line, and health insurance in purple, and commercial property casualty insurance in red have been profitable nationwide, but the blue line on this graph shows that auto and homeowners, the personal lines, lost money between 2022 and 2023. That's why rating agencies like AM Best, whose chart this is, downgraded auto and homeowners insurers from stable to negative for the first time in history last year. The outlook for homeowners insurance remains negative, which is a topic for another day. But the outlook for private passenger auto has improved, as insurers for the most part have been able to adjust rates to catch up to the increases in losses. And so, this slide charts the quarterly loss ratios for auto insurers, which for 13 consecutive quarters was unusually high, partially due to rate rebates or pandemic relief to policyholders when accident frequency basically cratered in 2020 during the pandemic. But miles driven quickly returned to normal while accident severity continued at an elevated level, leaving many auto insurers scrambling to try to catch up to the higher losses. Loss ratios hit a 20-year peak at the end of 2022 before starting to decline again as insurers caught up. A few of the largest, most sophisticated insurers have caught up largely to their rates have caught up to losses, and we're starting to see them compete for business by reducing rates in some markets, as we heard about Georgia this morning. But many auto insurers are still with maybe less sophisticated pricing tools are still struggling. Loss costs, or the cost of claims, are the primary driver of what we all pay for auto insurance. This chart provides a comparison of the producer price index for personal auto insurance on the yellow line over the last 5 years and compared to the cumulative price changes for key cost drivers. The dotted lines are prices for cars and and car parts. The green dots are used car prices, which spiked after the pandemic, but have eventually subsided, but still are at all those costs are still much elevated from where they were before the pandemic. Personal auto insurance has lagged the cost increases in the other sectors, but is starting to close the gap, as is commercial auto, which is represented by the solid red line. It's important to remember that insurance premiums are always going to be a lagging indicator, sort of like a wave coming to the shore. The cost increases hit the economy, then the claims are reported, the insurers pay the claims, then they adjust their rates sort of in the aftermath of that, looking to catch up and securing the necessary approvals from the regulators. All that means is that the cost increases hit premium bills well after the impact of the overall inflation rate may have eased somewhat. And perhaps that's nowhere more evident than the cost of auto repairs. And this graph shows that increased vehicle repair costs over the last 15 years, particularly steep in the last couple of years. These increases in repair costs have been mitigated by a slight decline in year over year in the number of parts and labor hours per repair, and the increase in total losses that kind of come out of the equation. But however, there are a variety of underlying factors which continue to put upward pressure on repair costs, as pointed out by the collision repair folks who spoke to you this morning, in large part by the increasing sophistication of the technology in newer vehicles. My best example of that is a windshield, which used to be a piece of glass, a rubber gasket, and an adhesive, and you could replace it almost anywhere, in your driveway, in the parking lot, wherever. But today that windshield has cameras mounted on it and sensors connected to it. So as you heard this morning, the vehicle must be scanned and recalibrated, and that adds a whole additional layer of cost. And that's true of every repair, and that's only going to grow as those sophisticated technologies spread through the fleet. You'll hear me say a couple of times that the average car on the road is about 12 years old in the United States right now, and a large part of those right now don't have that kind of technology. So those kinds of expenses are only going to increase. I wanted to take a moment to talk about a couple issues that arose during a previous meeting of this committee and that we heard about again today. That's aftermarket parts and manufacturer's repair standards. I'll start by saying that Rhode Island is probably not the best state to emulate. Despite being a small state, they have the highest average repair costs in the country. Rhode Island is number one. Georgia is 21st, according to CCC Information Services, who provides estimating software for both insurers and collision repair shops, as well as auto physical damage premiums. And those laws have played a role in driving up those costs. Insurers and shops share the same customers and have the same goal to get vehicles repaired properly, safely, and on a timely basis. No two repairs are the same, and it requires shops and insurers to work together, and that's very hard to legislate. That's probably one reason why in Rhode Island, I think it's been 18 bills over the last 20 years or so, continuing to try to legislate a process that really is a case-by-case basis. So on aftermarket parts, there's an interesting history there. The collision repair industry used alternatively sourced parts long before insurers started calling for their use, and they use them for the same reason insurers do, and that's response to OEM parts prices that can be as much as 60% higher than an aftermarket alternative. And for older vehicles, and again, keep in mind the average vehicle on the road today is over 12 years old, that can be the difference between a repairable vehicle and a total loss. A repairable vehicle means the insured doesn't have to replace a vehicle. New cars now, it costs as much as $50,000, and used car values are up 33. Used cars cost 33% more than they did 5 years ago. And the shop also would have a repair job when that vehicle can be repaired. And sometimes, the parts prices differences, that tells the tale. That's why every state allows insurers to call for the use of aftermarket parts, with most states, including Georgia, using language that is either identical to or very similar to the NAIC, National Association of Insurance Commissioners model, to regulate their use, requiring things like that the parts be of like kind and quality. There be disclosures that they're being used on the estimate, and there also be some disclosures about the warranty that's provided along with them. Vehicle owners always have the option to pay any difference in cost, but most insurers limit their use of aftermarket parts to older vehicles, more than a couple of years old, and some offer endorsements for OEM parts only. The other issue I wanted to talk a little bit about is manufacturers' repair standards, and we've seen proposals around the country that would require insurers to pay repairs according to the manufacturer's recommendations, and that sounds great. And when there are technical repair specifications provided by the manufacturers, insurers will follow that, but that's not always the case. What is often pointed to as standards are often vague or simply somewhat self-serving recommendations to only use the OEM's parts or only use shops blessed by the manufacturer. There are even some situations where manufacturers require shops to pay for access to that kind of information. So rather than providing clarity for the repair shop and the insurer, it only serves to muddy the waters further, providing only, and in some cases, providing opportunities for some repair shops. I don't want to paint with a broad brush, but some would use that to try to leverage a higher repair bill. Everyone knows the cost of medical care continues to rise. This chart is particularly interesting because it shows the medical charges for auto accidents, represented by the dark blue for third-party claims and the gray for first-party claims, are much higher and increasing more rapidly than the black line, which is the overall inflation index for healthcare. In other words, healthcare providers are charging auto insurers more, and in effect shifting some of those costs to auto insurance. Another ongoing cost driver that was mentioned earlier this morning was the continued deterioration in driving habits picked up during the pandemic. Speeding got much worse with the pandemic as drivers weren't as constrained by rush hour commuting traffic, and both minor and major speeding have continued to worsen every year. The distracted driving, we also heard someone mention this morning, that's also spiked with newer generations ever more glued to their phones. While driving has gotten much worse and miles driven has normalized, sometimes police enforcement of traffic violations has decreased in some places. That compounds or perhaps it enables some of these worsening driving habits. Perhaps most certainly in all was a recent AAA Foundation survey that showed that 96% of drivers admitted to aggressive driving behaviors in the past year, with 92% of drivers reporting that they of doing things that they know endanger others, such as speeding or cutting off vehicles. And so the auto insurance industry, and actually drivers in general, are caught in a race between the smart cars and some drivers who are not being very smart. So right now, it seems like some of the not smart drivers are winning. So what does that mean for private passenger auto insurance in Georgia? Well, loss costs in Georgia have consistently been higher than the countrywide averages. This data from the NAIC is the most recent, but it's only through 2023. But it shows that the Georgia private passenger auto insurers incurred $1.11 in costs and expenses for every dollar of premium they collected in 2023. That's a slight improvement over the previous 3 years, but still well above the five-year average of $1.07 for every dollar of premium. And you can see Georgia is represented by the red line, and the countrywide result is represented by the blue line. So you can see Georgia is consistently a little bit higher than the countrywide result. Contrary to what some will tell you, personal auto insurers in Georgia have not been rolling in profits over the last decade. For comparison, the black dashed line is the 10-year average return on net worth in the overall commercial sector, not just insurance companies, and that's almost 15%. The orange dashed line is the 10-year return for property casualty insurers in Georgia, which is at 3.2%, is less than a quarter as profitable on average, and that's all property casualty insurers. The red line is the return on capital for personal auto insurers in Georgia, which has been negative in 5 of the last 10 years, averaging a negative return for the last 10-year period. We always try to come to the table with some solutions, and we've been longtime advocates and members of industry-funded Insurance Institute for Highway Safety that develops that works on vehicle safety standards and does crash testing to keep make sure that the vehicles are safe, as safe as they can be. Over the past 50 years, vehicles and roadways have become significantly safer due to our industry's leadership. APCI also belongs to the Advocates for Highway and Auto Safety, and we advocate together with them for safer infrastructure and traffic safety standards. We also advocate for accident cost mitigation measures, including supporting highway safety enforcement, reducing legal system abuse, opposing auto parts tariffs, reducing regulatory costs, defending risk-based pricing, and reducing fraud. It's also important to remember that while any cost increases are tough in this economic climate or any economic climate, it's important to remember that auto insurance is still a relatively small percentage of car ownership costs. The red column is the average minimum required liability insurance to drive a car, which is still far less than all of the government fees, gasoline, repair costs, car payments, things like that. The overall cost of car ownership won't be magically made significantly more affordable through regulatory limits or suppressing that small red band of private passenger auto insurance rates. But rate limits do or will reduce competition long term, as we have already seen in several states historically. And you heard some things about carriers leaving the state here today from the insurance department. So once again, I thank you for the opportunity to talk with you today. And on behalf of APCIA members, I look forward to the opportunity to work with you on finding solutions to these challenges. And I welcome your questions and comments.
Bob, it doesn't look like you have any questions, but one thing I'd like to ask, do you know anything about the Florida law that passed recently about taking a percentage or capping the percentage of profit and then the rest has to go back to the customers?
I believe that law dates back to the 70s, and there's only a handful of states that have something similar. In that case, I think what they did is the law, and you're catching me a little cold here, but I believe the law says that the company has to refund if they do better than even they thought. So if it exceeds what they thought their profit margin would be. But to my knowledge, there's only a couple of states that have done that. And as we've seen in some other states who have tried to artificially suppress rates even in the face of increasing losses, that creates availability problems, and that's not a road you want to go down.
Take a closer look at Florida. I think they did it, and it addresses situations of profit and not loss.
It does, but I think it's based on when the insurer files their rates. They also usually have, like, this is what our projected profit will be. And so if for some reason losses are way less than they even thought they would be.
Well, thank you so much. That was really informative. Really appreciate you coming.
Okay,
And it looks like we've now reached the premium tax. So Bryce Rawson with the Department of Insurance, come on up and we will talk about premium. Love to hear about premium taxes.
I'm a little bit shorter, so I'm gonna move this mic down.
And just so you know, Chairman Shaw Blackman's watching, okay?
I'll have to watch my tongue then. Yes, sir. Thank you all for having me up here once more. Again, I am Bryce Rawson, Director of Legislative Affairs with the Georgia Insurance Commissioner's Office. And I'm trying to fluff my way while we pull up this presentation. I have today here with me our resident expert in premium tax, Mandy Snipes over there in the purple jacket. She has been with our department for about 13 years in our premium tax division. So if you guys have any questions that are a little bit too tough for me, I may drag her up here to help me answer some of these questions. Perfect. So just going over very briefly, because this presentation is meant to be a 101 style presentation. What is the premium tax division within our office? The premium tax division in our agency, it has 4 primary functions. To ensure compliance with all related laws on the books for premium tax, to collect and process premium tax returns, to assess, collect, and distribute the county and municipal tax, and to collect special insurance fraud fund, which funds our criminal investigations division, which I mentioned briefly before. think I'm having a little bit of problems with this clicker here, but I'll just go ahead and continue. Oh, there we go. So premium tax is primarily governed by Chapter 8 of Title 33 of the Georgia Code, and a premium tax is exactly what it sounds like. It is a tax on insurance premiums in the state of Georgia. These taxes are paid by insurance companies. All admitted insurance companies doing business in our state are subject to this tax. The state tax rate is 2.25% on the gross direct premiums that are received by these companies. And admitted companies in the state, that refers to domestic insurers, companies who are domiciled here in the state of Georgia, foreign insurers who are domiciled in another state, and then alien insurers who are domiciled in another country. The state tax rate for non-admitted filers, this is the surplus lines market, that is a little bit higher at about 4%. So non-admitted filers being surplus lines market, these are non-standard risk. So surplus lines carriers, they are not necessarily licensed with our office because they are writing risks that traditional insurance companies will not cover. For example, the commercial trucking industry, the surplus lines is growing in that manner because there are an increasing number of states or increasing number of companies in Georgia that are not willing to write the commercial trucking industry. And typically, if you are going to be in the surplus lines market and purchase those products, you have to demonstrate that you are unable to purchase a traditional insurance policy through a regular company. So moving on to the collections and distributions portion, which I know is important to our counties and cities in the state of Georgia. In addition to the state tax, so Georgia is fairly unique that we allow counties and cities to impose an additional premium tax in addition to the state tax portion. Counties and municipalities, they may impose a 1% tax on life companies and a 2.5% tax on all other insurance companies. And of course, as I stated previously, our office is responsible for the collection and distribution of those taxes. The distribution in each city and county is directly related to the population of that. You can see a pretty simple calculation there. So you, for example, you take the total population of a city, you divide it by the total population in the state of Georgia, and then you multiply it by how much tax we collect, and then you get your amount of distribution. There are, for our folks who are from consolidated governments, Muskogee, Columbus, or Athens, Clark, or right here in Macon, Bibb, those areas, they are treated as cities for the sake of the argument, but it is going to be roughly the same calculation. Deadlines and due dates, for you guys to keep in mind. So admitted companies, they must file an annual return by March 1st. Estimated premium tax payments are due by the 20th day of the last month of each quarter, March 20th, June 20th, so on. Non-admitted companies, so those surplus lines carriers and products, they are due 15 days after a quarter ends. And last but not least, the distributions that we collect, they go out to counties and cities on October 15th of each year. So all of our cities, they should already have those payments and they should have been distributed by this time. In calendar year 2024, our office collected about $1.85 billion in premium tax. About $744 million of that was transferred to the Treasury, and the remaining $1.1 billion has been distributed to our cities and counties. And members in front of you today, and for our members who are online, we'll be sure to send these numbers to you. You should have in front of you a list of your cities and counties in your districts that show how much they are receiving at this point in time. Then speaking of cities and counties, so how these premium tax dollars themselves are used. By code, as written in statute, only county premium tax dollars for those unincorporated parts of our state are subject to these specific rules that you see on there. The code states that county taxes can only be used for police protection, fire protection, garbage and solid waste collection, flood risk reduction, reducing ad valorem taxes, and any other services that may benefit the inhabitants of an unincorporated area of a county. Important to some of the conversations that were happening last session, moving on to retaliatory taxes and fees. A retaliatory tax is paid when there is a difference between the state that you are in, an insurance domicile state, and the state that you are selling into. Companies end up paying whichever rate is higher, and the difference is only counted for Georgia purposes against our state portion. It is not counted against that local portion of the tax. So if you are a Georgia company that is selling to another state, our tax rate, of course, our state being 2.25%. If you are selling into a state that is higher, then you're going to end up paying whatever that higher rate is. And that is going to be the retaliatory tax being paid out to that other state. If Georgia's is lower, then if Georgia's state tax rate is lower for the company selling into Georgia, then we would charge their original home state's rate, the state that they are domiciled in. And generally, because Georgia's rate is one of the highest in the nation for the state tax portion, we don't see a whole lot of retaliatory taxes and fees being paid into our state. Each year we get a little bit less than $1 million in aggregate in retaliatory taxes just because our tax rate, again, is so high. Moving on to abatements. So companies who invest a sufficient amount of their assets in a qualified Georgia-based property, and I know some of this may be a little bit small, but if they invest in our state a certain portion of their total assets, then they get abatements, which reduces some of their premium tax obligations on the front end. Of course, the purpose of these is being to encourage insurance companies to make investments in our state and facilitate economic development, create jobs, so on and so forth. I won't read each and every one of these, but qualified investments include bonds, real estate, loans, and taxable intangible property in the state of Georgia. If a company has 1/4 of their total assets in any of these 9 categories, then the state portion of their premium tax, so that 2.25%, is reduced to 1.25%. If a company has 3/4 of their total assets invested in these categories, then their state premium tax obligations, again, that 2.25% is reduced to 0.5%. And of course, these abatements are against the state portion of the premium tax, just to be clear, not that local portion. In 2024, companies received about $323 million in abatements. About $225 million of that amount was taken by Georgia domestic companies, and the remaining by foreign companies, meaning those domiciled, again, just in other states, not in other countries. There are also a number of tax credits and deductions that these companies are eligible for to reduce their tax liability. Of course, the same purpose as abatements to induce and encourage investment in our state. But these tend to be in a little bit more focused of a manner. These deductions and credit include company investments in low-income housing, agribusiness, qualified education expenses, retaliatory taxes paid to other states, foster care, and so on. And crucial to note here, this is a small note. So life companies, they are permitted to deduct their state premium tax liability by how much they pay in the local taxes. In total, companies took approximately $213 million in deductions and tax credits. About $6 million of this was domestic insurers, and the remaining $206 million was foreign insurers. I have a few charts coming up here that just kind of goes over some of what we discussed today. So all combined, if you look at combining the local tax and state tax, the maximum combined tax rate for admitted companies on the life side, that is 3.25%. Going down to all other lines, that is 4.75%, and the surplus lines products at 4.0%, of course. And that final column that you're going to see, that is assuming that companies take the max abatement that is allowed. So we talked about by investing either 1/4 or 3/4 of their total assets in the state of Georgia. The effective tax rate for life and companies is going to be 0.5%, and all other lines is going to add up to roughly about 3%. And moving on to just a couple more charts. This is comparing us to some of our neighboring states here in the Southeast. As you're going to be able to see, Georgia, our state tax rate is generally not quite the highest on state tax rate. Alabama beats us by 0.05%. But then you add in, and this is of course just for life companies, you add in our local tax, that additional 1%. That gets us just a little bit higher than our neighbors. Same kind of story for all other lines of premium tax. This time Alabama gets us by a little bit more than 1%. But we're still pretty high for where we are. Tennessee's a little bit above us as well in the state portion, but then you add in our local tax at 2.5% for all other companies, and then we still end up being the highest in the Southeast. Surplus lines, is roughly the same story as well. There's a couple of other minor fees in other states, and we actually tend to be lower than the rest of these in the surplus lines market than our other competing states in the Southeast. I know I went through some of those slides pretty quickly, y'all. If you guys have any questions, I'd like to open that up that time right now.
Thank you,
If you need
Bryce.
to go back-
I know we've got Chairman Shaw Blackman of Ways and Means on Zoom and some other Ways and Means folks. So any of them who want to ask questions, get ready and we'll put you on. I did want to ask while we're checking with them, retaliatory rates. It seems to me it's almost like a tariff where, if we set our premium tax at a certain amount, it has an effect on the retaliatory rates. There may be an equilibrium where we could reduce our premium tax amount, maybe on the state portion, and we have a net increase, even though a net increase in funds, even though you decrease the rate. I don't want to put you on the spot, but if you could help shed a light on the committee, maybe between now and the December meeting, on any numbers or analysis that y'all have done about that equilibrium of, if we dial down the state portion of the premium tax, is there a point where we could have a break even or maybe even a net increase due to the lack of retaliatory taxes?
Certainly, and we have some numbers. We actually talked with Chairman Shaw Blackman just a little bit last year on these. We'd be more than happy to share that with members of the committee after today, and certainly before the next meeting. A little bit on the research we've done. That research, it is a few months old. We did do that on 2023 numbers. That's what we had available at that point in time. So we'll see if we can pull together something that's a little bit more recent.
Thank you.
If not, then we'll be happy to share what
And
we have.
I noticed on the last slide, Florida's main premium tax rate is 1.75. And I hear all the time, when people are saying, well, Florida doesn't have an income tax, they gather in other stuff. But in this case, their income tax is lower than ours and their premium tax is lower than ours. I know they have Disney World and the beach and all that, but that's another thing where it doesn't mean that other taxes are going to go up just because the income tax goes down. And then we had a question on number 7 on abatements, policy loans on insurance policies. Tell us what that's about. I think the other abatement items are understandable. Policy loans on insurance policies issued by the company on lives of persons, residents in the state. And
I'll have to invite my my partner Mandy up here for a minute.
No problem. And Mandy has been dealing with a premium tax for 13 years. So Mandy, it's great to have you here. And if that's something peripheral, we'll let you get back with us on that. It sounds like that's kind of it wasn't clear to us either, but don't worry about it. We'll move on. Do we have anybody on Zoom who's got a question?
Mr. Chairman, I just really had a comment. I didn't necessarily have a question.
Thank you.
Can you hear me okay? I am on my cell phone, and I apologize for, gosh, you're just down the road and just had some extenuating circumstances and unable to be there today. But a great, I think, presentation from Bryce, and appreciate you kind of shedding a little bit of additional education on this particular issue. You and I have had a chance to kind of get briefed up on it, and I know I've communicated some with you about the fact that we're looking at it and have unpacked this to some degree and kind of made it part of our overall analysis, working with the commissioner's office on, what's best for the consumer. How can we do something here that might be beneficial, and, taking into consideration all of the positions that the stakeholders have, and, not affecting anything with unintended consequences. But as you can see, it's a lot to unpack, and we're going to continue to work through it, and appreciate the fact that you've looked into it and are willing to continue to hear about it and see what we can do.
Chairman Blackman. All right, anybody else on Zoom? I know we got Representative Trey Kelly, who's now Secretary of the Rules Committee. We got Floor Leader Sue Hong, Chairman Bruce Williamson. I know there are Ways and Means folks. If nobody on that Ways and Means contingent on Zoom, Chairman Lumsden, sounds like you got a question.
Just curious to know what the relationship is or the impact of our premium tax as it relates to having companies looking at Georgia as a place to domicile.
Absolutely. And that goes directly into our conversation about retaliatory taxes, right? So because our tax rate is so high for domiciled companies, you can consider what our rates are is the floor. That is the minimum that you're going to be paying when you are going, especially if you're a domiciled company, even trying to sell into other states, because our rate is 2.25%, right? If you are selling into, let's say you're selling into Florida, right? We are 0.5% higher on the state tax portion of our premium tax. So if you are a Georgia domiciled company and you are selling in Florida, you're paying the Georgia rate. You're paying that 2.25%. And that is a retaliatory tax that essentially our companies that are domiciled in Georgia are paying to those in Florida. If you are a Florida company, that 1.75%, right? That you can consider that in this concept. That's going to be your minimum, right? If you're a Florida company and you're selling in the Georgia, you're still paying that 2.25%, and you're also paying that local tax. However, if you're a Florida company selling in the state of Florida, you're just paying that 1.75%, right? So there's just a slight difference that you are paying if you are trying to sell, if you are a Florida domicile and you're selling into Georgia, yeah, you're paying the Georgia rates. But you are eventually, at some point, you are going to be paying just a little bit more in Georgia because that is your floor. That is the minimum that you are paying.
That impacts our attractiveness as a place to domicile.
Absolutely. It does not incentivize more companies to domicile in the state of Georgia. That is the short answer.
And there are some advantages for us having those companies domiciled.
Absolutely. There are a number of advantages. I mean, you can think of just at a bare minimum, right? Creates more jobs, allows more opportunity, creates more competition here in the state of Georgia. I think because, as we all know, that's 101. More competition leads to lower prices. So having more companies operate here in the state of Georgia has a lot of benefits.
Leader Hughley.
Thank you, Mr. Chairman. What is the other tax that you're showing on your slide there?
That is the local tax. Yeah. So that is the county municipal tax that we're talking about. Yes.
Taxes that the other states don't allow for. Is that what it is?
Yeah. So Georgia is fairly unique in that we allow cities and counties to impose that tax in addition to the state tax. I think if you saw on the final, there are other fees that some other states do have. In some other lines, but when it comes to most normal lines, Georgia is fairly unique in the having that tax.
And so then why is Georgia lower on the surplus lines than the other states? What's the deal there?
Well, frankly, if you have lower tax rate, we may be, our number has not been updated in quite a while, I'll say that much. But when you have a lower tax rate, as I think some of the members on this committee have discussed, that encourages more business to come into our state. So, surplus lines, companies, they may be a little bit more willing to sell into the state of Georgia. Just taking this in its own little space, not even considering any other factors, but having low tax rates helps companies just sell in the state of Georgia, and the taxes not eating into their profits, just generally speaking.
Any other questions for Bryce?
Mr. Chairman, Mr. Chairman, may I just throw one other thing in there? And Bryce may have mentioned this because I've kind of been coming off and on, but I think the local portion, one thing to consider here is that the offset is that it is intended to lower the ISO rating, and I think legally, I think are supposed to use those funds to assist there, and Chairman Lumsden, and I know Bryce can probably speak to that a little bit better, but that's kind of what the offset, and I think the original intent there was, and one of the things that I think we probably want to take a look at and unpack as we look at this further.
Thank you. And I appreciate the department circulating a breakdown of some of our local jurisdictions. In Gwinnett County, it's over 66 million. Duluth, it's 3.4 million. Sugar Hill, 2.7 million. Swanee, it's 2.2 million. And all those, it's a little bit more than that. But in terms of police and fire and all that, that doesn't defray that entire amount. These are just amounts that pay for a portion of those services. I know the locals will probably get to that more, but appreciate you, Chairman Blackman, for pointing that out. And 33-8-8.3 is that statutory list. Any other questions for Bryce? Stay put, because the locals are going to speak and there may be follow up for you. So appreciate you coming. All right, who wants to go first? ACCG or GMA? Cities or counties? We got more cities than counties. So everybody, okay, looks like the cities are up. Jim Thornton and Ryan Bowersox.
Okay, well, good afternoon. Thank you, Mr. Chairman, members of the committee, for the opportunity to present to you this afternoon about the insurance premium tax. So I'm Jim Thornton, Director of Government Relations at GMA. I'm joined by our Assistant General Counsel, Ryan Bowersox. And we'll try to go through this quickly and not repeat too much of what Bryce has done a good job of presenting. But I do want to sort of, through our presentation, where we're going to do a little bit of a high-level overview and then drill down into a few case studies. We're hoping to leave you with two basic points. One is that the insurance premium tax is a significant revenue source for cities and counties, and that it is basically taking pressure off of property tax. And I'll work through how that works mathematically, but it's essentially reducing the property tax that otherwise would be necessary to support essential services. And then secondly, that cities are providing, and counties as well, are providing essential services that actually are helping to reduce the risk and the exposure of insurance companies, some of which has already been alluded to today through traffic enforcement and other things that we'll allude to. So if I can click through this. Again, I don't want to repeat too much of what Bryce has already done, but as he says, cities and counties have the option of levying a 1% sales tax on life insurance, or premium tax on life insurance, and a 2.5% premium tax on property and casualty. The insurance commissioner collects those and remits them every year. And I do want to talk just a minute about the formula, and I think this is a critical point. So the statutory formula for how the insurance commissioner allocates the insurance premium tax to cities and counties is based on population. It's a straight population formula. But counties only get credit for the unincorporated portion of the population. So cities get the municipal population. That's relatively straightforward. That's who they're providing services for. Counties are only getting insurance premium tax allocation based on the unincorporated portion of their population. And that's critical for the statute that Bryce referenced, because essentially what that statute does is it gives the counties the power to allocate their insurance premium tax to only unincorporated services. Because counties provide some services just for the unincorporated area, some services they provide for the entire county. And so under service delivery agreements, one of the things that the Service Delivery Act tries to avoid is, or tries to require, is that the people receiving the services pay for the services. That's why you create unincorporated service districts and so forth. Well, this kind of works in reverse of that, where if the counties are only getting credit for the population in the unincorporated area, they should have the right to allocate those funds to unincorporated services. So that statute doesn't, it seems like it's acting as a restriction, but it's actually acting as a power for the counties to be able to allocate through their accounting method how they are accounting for that insurance premium tax. Cities, on the other hand, for general government services, by definition, are only providing general government services for municipal population. So that's the reason there's a little bit of a technicality there. So the funds are distributed. It's a significant resource. It amounts to almost $90 per person for cities. I'm assuming the statistic is probably similar on counties. I wanted to show you, and I'm going to focus on the aggregate, and then Ryan is going to drill into a few specific cities that are case studies. But in the aggregate, city budgets are primarily funded by primarily property tax and then sales tax. So the largest portion of cities' tax revenue, about 44%, is property tax. If you combine LOST, SPLOST, and T-SPLOST, which are our local option sales taxes, you get to about 39%. And then the next item on the chart, if you will, is insurance premium tax. On a state aggregate average, it's about 8% of the municipal tax revenue. But then I want to pivot and talk about what cities fund with their municipal revenues. So if you look at, and again, this is aggregate, and Ryan's going to look at a few specific examples. If you look at on the aggregate, cities are funding public safety. That is far and away the largest expenditure that cities are incurring. That is police and fire departments that they're providing in the municipal area. That's almost 38% of their general fund budget. The second item is public works. Public works is a little bit of a amalgamation of several things, but importantly, that includes street maintenance, things like clearing debris, maintaining stormwater drains, garbage removal from the right-of-way, and sidewalks. So things that also are going to make our roads and our cities safer places, reducing insurance risk and claims. If you go to judicial, which is our about 9%, public works is about a little over 20%, judicial is right at 9%. And the reason I highlight that is because one of the things that many of our cities do through their judicial municipal court, in addition to traffic enforcement, which has obviously been alluded to earlier, they also do a lot of code enforcement. And it's actually very expensive. It's relatively, I used to be a solicitor in a municipal court. It's relatively easy to prosecute a speeding case. It's really hard to prosecute a code enforcement violation because you have to bring in experts and you have to bring in more testimony sometimes. So that can sometimes be an expense. But going back to public safety, which is the primary obligation of local government, it's police and fire. It's enforcing the speeding laws. It's enforcing distracted driving, many of the things that we've heard about today, as well as responding to accidents. And certainly that applies on the fire department side as well. Obviously, fire departments do a lot with prevention, also do a lot with response. And then very importantly, I think it's worth noting that over half of most fire departments' calls are medical emergencies as well. So they are oftentimes the first on the scene of an accident, providing stabilization at the scene of an accident before there is a transport by an ambulance. All of that has the effect of reducing claims risk and responding to needs in the community. Real quickly to run through this, just to set Ryan up for his examples. If any of you have been on a council or a commission before, you probably understand this, but when a city or a county is setting their millage rate, that's the end of the process. The first thing they do is they have to figure out what is their budget. What is the budget what's it going to cost to deliver the police, the fire, the public works, all of the things that we've alluded to. From that budget, they are able to reduce the budgeted expenditures by other sources of revenue other than property tax, things like sales tax, insurance premium tax, fees that they might collect, other things that reduce that. And the difference, if you will, the difference is the amount that has to be covered by property tax. They then take that amount, divide it across their digest, and then they will set the millage rate. So the millage rate is the end of that process. And the reason I emphasize that is because if you change, whether it's sales tax or insurance premium tax or any of these other revenues, which cities generally have no control over, right? That's the sales tax determined by the economy, the insurance premium tax determined by the economy, et cetera. If you adjust the other revenues, what you're doing is you're increasing potentially the amount that has to be covered by property tax. So in the example on the screen, if a city has $10 million budget to cover their general fund, if there are other sources of revenue go from 6 to 5, then the amount that has to be covered by property tax actually increases from 4 to 5. And if you had a $400 million digest, that means the consequence of that would be increasing the millage rate that that city has to levy from 10 mills to 12.5 mills, which is a very significant increase in the millage rate. And I just wanted to illustrate that because I think that will make more sense when Ryan talks about some specific examples where he's going to talk about the potential of the use of the insurance premium tax as a property tax offset, and also focus on the public safety expenditure that is associated with that insurance premium tax. I'm going to turn it over to him, and then we'll both be here for questions.
Thanks. As Jim said, he kind of gave the macro overview of this, where I'm going to pivot a little bit into about 6 case studies divided up a little bit by population and the impact of the insurance premium taxes in those jurisdictions and on the services they provide. Starting off, the numbers that I'm going to provide are about a year or so old. Most of them come from the DCA report on local government finances. So a lot of the updated numbers that Bryce gave you earlier, these will be a little less when we start looking at the insurance premium tax numbers that I'm providing. We also received some digest information from about 2 years ago from Department of Revenue, is where all this is going to be calculated from. So we're going to start off with the city of Alpharetta. I'm going to start with the largest population city and kind of work through. I'll explain this one in a little more detail and then kind of highlight the other ones after explaining kind of our methodology here. As you see, population of about 65,000 results in almost 6,000 or 6 million in insurance premium tax revenue, with a budget of over 108 million. Insurance premium tax makes up about 5.37%. What that equates to of that almost 6 million insurance premium tax, looking at their digest from about then, if that were to be made up, we'd be looking at about 2.04 mills added to that. Of their public safety expenditures, again, significant number, over 42 million of that 108 million are going towards public safety. That is only public safety operations. That is not including capital. That is not including equipment replacements for the years. That is the operating expense of the public safety departments, mainly their fire and their police departments at that point. We'll switch to the city of Suwannee. Over 20,000, almost 2 million in insurance premium tax. That insurance premium tax makes up 8.96% of the budget. That would equate to an increase in an M&O levy of 1.88 mills. Currently, to help subsidize the public safety expenditures, the insurance premium tax covers 32.69% of their public safety expenditures. The city of Monroe, about 15,000, about $1.5 million of insurance premium tax. That equates out to 11.13% of the budget. If an M&O levy were to replace that, we'd be looking at an additional 4.33 mills there. And currently, the insurance premium tax subsidizes the public safety 14.24%. Waycross, almost 14,000 as well. We've got about 1,200,000 in insurance premium tax. Covers about 7.9% of the budget. To make that up, we'd be looking at 6.51 mills. Currently looking at 12.53% of the public safety budget there. City of Cedartown, a little over 10,000. Almost $1 million in insurance premium tax, 11.65% of their revenues. We'd be looking here at a 7.39 addition to their M&O levy, currently covering about 17.48% of their public safety expenditures. And finally, one of the smaller cities, we've got Hawkinsville at almost 4,000, 352,000 in insurance premium tax revenue. That is about 13.19% of their budget, an additional mill of over 5 mills, and that's covering 33.64% of their public safety expenditure. Kind of wraps up our quick case study. Jim and I are happy to answer any questions on anything that we cover today.
Thank you all for that detailed information. Any questions from the committee? Any questions from our members on Zoom? Or Representative Donahue.
So Brazelton, what they do is they receive sales tax. Yeah, so Brazelton has they do not collect a millage rate because they have sufficient other resources, so that if you went back to like my chart, walk back, way back how that is. So in that case, Brazelton they would set a local government operating budget to fund their police, fire, all their activities. They have sufficient revenue from other sources. And obviously they have a huge sales tax, tourism, generator there. They have sufficient revenue in the dark blue so that when it comes to the budget to be covered by property tax, it comes to zero. So they know they do not have to, when they divide their zero by their digest, they end up with a millage rate equivalent of zero. But they would still have the same mathematical adjustment that if their sales tax went down, or if their insurance premium tax went down, or if their other fees and revenues went down, then they would be in the same position of potentially having to go up on their millage. It would just be, in that example, it would be going from not 10 to 12.5. It would be going from 0 to 2.5 on the far right, if that math makes sense.
And Representative Donahue, with you bringing up that far of the world, Majority Leader Chuck Epstration's been monitoring the meeting today, and Sam West, his legal counsel's been here today. So he represents Mulberry. They're in the same position. They don't have a property tax, and several of the cities in my area are in that.
Yeah, we have a handful of cities that do not collect. They technically, and they technically levy a millage, but they roll it back with local option sales tax, and so it ends up being a net collection of zero.
Jim and Ryan, is it true that the millage rate is capped at 20 mills? Is that schools?
That's only for schools.
Okay.
Cities, there are some cities that have a millage rate cap. There are a lot of cities that don't have a millage rate cap. That is a
okay. So
it's charter specific. That is correct. It's charter specific. Whereas the school system has a statewide cap.
Any questions on Zoom?
Okay.
Okay.
Right. Thank you.
Doesn't sound like we have anything on Zoom. Thank you all from GMA, and I would like to call up Dave Wills from ACCG. The county numbers in my case are a lot bigger. So tell us about the county position. I believe you are, last but not least.
All right. So last speaker. So I'm reminded of a story. If you've ever read the book about Carl Vinson, and the one that's published by the Carl Vinson Institute of Government, there's a story in there about him chairing the Naval Committee in Congress. And he was preceded by speakers who basically said everything that he was going to say. And so this is the way he began. Thank you, Mr. Chairman. The previous speakers pretty much covered everything, and that's as far as he got because Chairman Vincent gabbled him down and said, "Thank you, next witness." I will say Bryce and Jim and Ryan have done such a great job that I don't need to say much about that. I do want to emphasize the timing of the receipt of the insurance premium tax. Counties, relatively speaking, are cash rich early in the year after they've collected property tax. So they bank that money. And then because they don't have enough revenue from other sources, they have to continually draw it down. Having been a county commissioner 14 years, been with ACCG 17, I see that line and it comes down like this. And you begin to wonder, how am I going to pay my bills in late August, September? And you're going, man, I can't wait for October the 15th to get here because that is an important source of revenue. So I do want to emphasize that point. Also, if you'll allow me to diverge just a minute, and I'll close on a couple of positive notes, because that's all I'm going to say about IPT. I want you to know that a week ago today, the Board of Trustees that oversees the ACCG insurance pool for workers' compensation voted to reduce rates by 11.4%. That's a significant decrease. And part of that is because trends have been better, claims history has been better, and ACCG pays for safety grants for counties in the program. So we actually give them money to do things, to buy equipment that help to reduce or mitigate the impact to injuries for workers. And then we also have within our property and casualty program what we call our HR hotline or helpline. So when a county has an employment-related matter, we say, here's free legal service. We'll pay for it because what we're trying to do is keep you from getting to court. We don't want you to have to litigate that matter. So with that said, I'll close on this note. You all had the the fortitude and the wisdom to pass tort reform. And I'd like to share one example with you about how that has impacted our program so far. And it's very early, obviously. So this is the first case that I know of, but we recently had a case that was involved an individual who was allegedly speeding in a 35-mile-an-hour zone, allegedly racing, met an oncoming public vehicle. I think it was lights and sirens, but I may be wrong on that, ran off the road and hit a tree, then filed a claim against the county. They demanded $800,000 in settlement. Because litigation is so expensive, we offered $100,000 and they refused. So we got an accident reconstruction team involved. They put it together. The guy was claiming that he had a facial injury, which had permanently impaired his vision. And so we got a doctor to examine him. And the doctor said, no, his vision is as good as it ever was. And so we went to court. And because of the change that you all made that allows for the bifurcation of the process so that you can separate. So you have to either prove liability first and then move to damages. Well, he couldn't prove that the county was liable, because when the jury came back, they said it's 50-50. Well, in order for you to go to the next phase, you have to be under 50. So he didn't get to the next phase. So we understood that he was going to appeal the decision of the court. And in the meantime, we offered $30,000 and they took it. So we settled an $800,000 claim for $30,000. Now, we had some expenses involved, but the net effect is that's money that we don't have to collect from counties to insure them. So thank you for tort reform. And I'll be glad to answer any questions about IPT or anything else.
Any questions from the committee or the committee members on Zoom?
I'll be glad to do whatever you'd like, sir.
Thanks for coming. That House Bill 447 from last term that former Representative Ken Vance did about the license plate readers and letting city and county police and sheriffs use that to see if we've got uninsured motorists. Take a look at that. I know a lot of counties have their own county police in addition to the sheriffs. So let us know if that's something the counties could put to use. It seems like to me to shrink that 10 or 15% of uninsured motorists, that might be a good thing to take a closer look at.
Thank you very much. I appreciate it.
No, these are manned. These are not unmanned. Ken Vance's bill had an officer operating them, not unmanned. All right.
Thank you.
Thank you. With that, we are adjourned. Thank you.